Good morning, everybody. This is Rose. Today is November 8th, Tuesday. It is 4 minutes after 9 a.m. Eastern Time. All right, so we have no news scheduled, nothing exciting. That's because today is election in the U.S. and a lot of the news or the moves will begin after election, and it's going to go all the way to the evening. So people, I believe it's midterm election, so it's just market does do actually bullish things after the elections. So we're going to have probably a quiet day today. There's not much. We might have maybe Fed speaking, but I doubt it. There's nothing scheduled. I don't see it. So we should be fine trading just a regular price action. Hopefully there will be no surprises. All right, let's begin. Let me fix this a little bit. All right, so market went back up to this trend line. We have been in a trading range, and this area, October 5th, has been a resistance turn, briefly support, but the trend line here rejected the price and we came back down. And we already knew that where the price was going. Right here, right? Price turn, but bearish, rejected, false breakout, comes back. That's the second rejection after running some of the sell orders here, but then it cannot maintain, and we make a higher low. It cannot maintain the bearishness, we make a higher low, and big bull bar, and we continue to go up. We test these high, we test this area, test that area, and then we come down again. So this area becomes, and I said at that time, October 18 high is important because that was a breakout point. We're going to come back, but this October also 5th is also an important area because it's a breakout point. So even if we breach below and if we cannot sell, we're going to probably go back and test it above again. And that's where we are. So the bulls right now, and they need the catalyst to keep going up higher. Okay, so 20 EMA is trying to cross above 50. When we get these crossovers on a higher time frame between the 50 and the 20, the red is 50 SMA, and the 20 EMA, we get a lot of bullishness. Okay, but the crossover has not yet happened. And around here, we might have sellers waiting. So if we do go up, and if the 20 EMA has not yet crossed, we could come back to it. That means we would trim this trend line, look for support, and then go up. Okay, so don't get too excited about this bullishness. I think the market is waiting for election news. And you heard Albert talk about the election in the U.S. Quite a bit and trying to explain how things go. So if you want to re-watch and listen to yesterday's replay, Monday, November 7th, you can learn a lot from there. So interesting enough, this trend line, we keep coming back to it. Okay, so, but let me show you guys something. So here is leg one, first pullback, which is correction, another leg two, second correction, and then the leg three. So let's see. If I said at that time from here to here was our target, but it could also be that the price was at that time, I said we're trying to reach up to this level or whatever the breakout test right there. We had a double top at that time and we sold. We knew this was coming, but this was right here also news related. okay, employment situation, I believe, after the FOMC. And so we knew we were going to stop right around here. You see this trend line right there? Okay, because of this. That's basically your wedge, okay? So here is your first correction, second correction, okay? And then the final leg down. Okay, so you connect that 1 and 4, and it either acts as resistance or support. In this case, it's support, so we bounced. And then we go right back to this trend line. We're trying to squeeze out of this as bullish. That's fine. We'll probably may go back up here. Bulls actually want to go up and test here. But before then, we have several obstacles here. Furthermore, this gap area, sellers are waiting here. So before we reach here, there will be a lot of, sellers waiting there. Now, even if we just go higher today, if we do go higher, okay, like I said, we don't have a crossover, so that'll be actually testing the sell zone here, and then we might actually sell back a little bit, look for support, and if we do get above it, then that's great. They're going to want to use this area of support, then we will get a lot more bullishness. Now, we're also going into holidays, so we could get some rallies. Okay, so let's see how that goes, but that's still far away. And so I am watching price to see what it's going to do here, because it's getting a little bit too high. Okay, so on the weekly, we have market is bullish. We're testing the last week's mid-level. We are inside last week's range. Now, it's also inside, outside, inside. So it's a breakout mode, right? On the weekly chart, but I want to check something real quick. I don't want to lie there. Yep. Okay, so this is higher. You can see. Okay, here we go. So we're coming to the mid. We already did. You could see it right here on the hourly chart. This is the RTH to keep things compact. I measured the last week's range, okay? And yesterday I kept saying, after the live trade room, I actually started to post in Discord, and I kept saying that this area is important because bulls really want to go and test the midpoint. So if you're trying to sell this triangle, okay, you might get stuck. Okay, try not to sell it because we have a limit order buyers showed up, but the bar that hour closed bearish. Now, we don't know, is this going to sell? It closed bearish, but it didn't close on its mid-level, so that hour right there was actually not very bearish at all. So I figured the next hour might try to test above the prior hour. Now, the next hour, that bull body actually failed, but tells you that it's an inside-outside. Inside, that's a IOI, breakout mode. So the breakout is coming. We're definitely going to test that hour's high. Then the magnet is right there. And I even said, I think we're going to go ahead and go test that 50 SMA. And that's exactly what we did. So I held on to my buy order, the long trade. And that was a really good trade. So you can use this, but look where we are. Okay, so we're last week's midpoint. There's a lot of, what the bulls are trying to do is they're trying to reach here, okay? And they're trying to overlap. They're trying to close this bear gap, okay? So somewhere there or right there, this is where the bulls trying to reach. So can we go further up? I think we need to thoroughly test above the 50 SMA. So I don't think we're done yet. But market needs to pull back, find some support before going back up. Now, 50 SMA is still above 20 EMA. So that means this is 10 SMA, the gold line, and that's also below the 50. So we're still bearish in a way, but that could end up being a pullback before we go up, because this is 1 pullback, 2 pullback, maybe 3. I don't know. So if that's the 3, we're coming now, we're pulling back, but 1 pullback, to pull back, we need the third push. So we could not only get back up here, this area, we might even test this area before coming down, okay? So I think the bulls want to push further up today. So, but that means we need to get above the Globex high first, all right? So we have a high. U.S. session hasn't started yet, but this makes this high Globex high. So I have a important resistance here that I think bulls want to test. There might be some sellers waiting there, but we could continue to push higher, okay? We might even get back up here before coming down if the bulls are strong. Now, can we swing this down? Because we have a 3-push top, right? Wedge pattern. So now, if bears want to sell this and they want to swing all the way down and come back to yesterday's trading range area, which is right here, okay, very strong balance zone. If they want to come down here, they're going to have to show us really strong bear bars, maybe at the open, and maybe bounce here, but keep swinging down. You know, we can sell, but I still don't know. Right now, that is not a good sell signal bar. You can see, right? And the bulls are not buying it. When I say buying it, they don't believe that this is a good sell signal bar, so they might try to challenge this wick area. If they kind of fill that wick, that means there's still bullish pressure, and they may not want to let go. We'll see. But if we somehow get a bear bar at the open, that could bring us down. But still, okay, we have a trend line, and trend line is the best place to trap the bears trying to sell the first break of a trend line, right? And another thing here on the 15-minute chart, we've broken out, okay, all in line with the hourly chart. So if I want to be long or bullish, right, so I have to think about what has happened in the past that I can use as support to go long. So we have a huge breakout yesterday into the close, and then we continued after hours before coming down. This head and shoulders actually failed, ended up being a trap for the bears who are trying to sell, ended up being a wedge bull flag. So what the bulls are trying to do is they're trying to break that. So they broke, but they couldn't maintain, so that's a failed breakout. It comes down. Now they're trying again. If this fails, then we have a wedge, and then we have 2 failed breakouts. We could come down and sell. This becomes a structure. If we break that structure, we would get a measured move target. Okay, that could bring us down very quickly to the Globex low into this trading range. But above this trading range, something happened. We broke out. We came down, we found support, and then we came down, we found support, we went up, okay? So there's still buyers waiting, so we could still bounce, and bulls are going to try to prevent the Globex low break, and the bulls could actually swing into the close and close the day around 50% of Globex level. So I don't know if we're going to become that bearish at all. I think the bulls are looking for some kind of support to break out from the Globex high again, but I'm prepared for every scenario because of this area that we could use as target if the bears get serious, but we will bounce there. Okay, so for now, I am not bearish at all. I just want to see what the bulls will do at the open with that terrible sell signal bar. Okay, now bears pushed that body all the way down and managed to close it, but nothing closed below the close of that bear bar. So how bearish is this? We'll see. Bears really need continuation bear bars, and they need to take out the low of this bar, close a really strong bear bar. But even then, they're going to get challenged right there because this is a breakout 2-legged move. Think about it that way, right? And there might be buyers still there, so we'll see. So weekly chart, testing the last week's midpoint, okay, at this point, and there might be some sellers there, but we'll see. I think the bulls may try to go higher because we are already 38.14, so we are just here. So if this hour starts to become bullish and close above 50% last week, we could reach 38.50 area, 38.49 area very quickly. There's some I keep hearing beeping, so give me a second. Someone's trying to reach me, I guess. Hang on. Somebody's posting something constantly, and I keep hearing it. I'm trying to mute it, and I can't seem to mute it. It's very distracting. Never mind. Okay. All right, so on the monthly, we tested prior month's high, but we're not that bearish, obviously, so let me see. We tested the October 5th high, got rejected, so we're back down underneath that area once again. Market was bullish, so at the open it might actually continue to buy, okay, for I don't know, hour. We'll see how it goes. But like I said, I think bulls are going to try to challenge this. Now, we're not going to open up at the high of yesterday, but we're so close to it, so they may want to, like I said, keep going higher. Hang on a minute, someone's trying to reach me. Just give me a second, please. All right, I'm back. All right, so yesterday, let's talk about what has happened. All right, so we gapped up yesterday, but you need to squeeze your chart to see, where are we really testing? We had a 2-day trading range, day 1 and day 2. So we're pretty, if you take the entire trading range and divide it into 2, you're in the premium area, okay? And we're kind of at the top. See that top right there? And especially the bar 1 not able to close bullish, you're kind of getting a sense of, okay, I think we're too high here. This isn't a good place to actually buy and go. Now, some traders will put a buy order here and a sell order underneath. And, at this point, I'm thinking is we gapped up. We're at the top of the trading range. I think the selling underneath that bar is going to be a lot more, profitable than trying to buy it. But the first bar is a doji, even though it's a bear bar. It's kind of difficult to say what it's going to do. So if you wait for the second bar, you're kind of missing your chance. But 2 bear bars, okay, one of them closed on its low, the other one actually closed below its midpoint. So it tells me that they are going to look for a second leg down, the bears, right? So it might be looking for support, so it might end up coming down to the EMA. But the majority of the bar 2, or you could say half of that bar 2, is actually overlapping with bar 1. So that is not a good stop order market. However, if you do put a sell order underneath bar 2, you might still get, okay, filled. But since the bars are 50%, okay, overlapping, wouldn't it be better if you actually sell underneath bar 1 and wait for a pullback, get filled? So when you're opening and closing trades, think of what kind of market you're in. Are you in a stop order market or are you in a limit order market? Because if you think that the bars are overlapping at least 50%, you might be in a limit order market. So selling with a pullback might be a lot better, okay, and advantageous, because you're going to be filled here rather than getting filled and only make a few points. You will be doubling your reward with a pullback sell underneath bar 1. So you get bar 3, okay, it's an inside bar, and bulls are nowhere to be found, right? So this isn't a good buy opportunity or buy setup, because you want to see a bull bar with a wick, right? So most likely market is going to test underneath this. Either if the bulls are going to come in, they're going to have to put maybe a bull bar with a micro double bottom or double bottom with a wick underneath that bull bar, and then buy and go. So it's to me more relevant to test underneath bar 3 to see if there are any limit order buyers. Some limit order buyers actually did enter because this bar 4 went up high. But the problem here is that, okay, the sell to close 2, bar 2 bears actually trapped, right? So they couldn't make money. So what they're going to do is they're probably going to sell inside of this upper wick of any bull bar to get a break even or fix their trade. Okay, hang on a minute. Fix their trade, then okay, here then the bulls will actually advance. So the bears are advancing here. So here's their second leg. No bull bar close. So the limit order buyers who bought here, they're going to get out. And now they're upset. What are they going to do? They're stuck because they bought this probably. They didn't get out if they haven't scalped. What are they going to do? Well, they're going to buy probably 5 points below. Although I don't know how many points did they buy there. That was 10 points. Okay, so they're going to probably buy 5 points below where they entered. Okay, and then they might buy another 5 points below. That happens to be the key price level, EMA. So they bought. So if you actually bought here underneath, and then you buy again at the EMA, okay, or 5 or 10 points, your 50% break even is right there. And they might leave a runner to get back up, maybe even go up to these levels where they hoped that the price would go. And market did go, so their runner was running. But at that time, I'm seeing bears are making money and the bulls are making money. So now we have double bottom and a micro double bottom, okay, at the EMA. Bulls taking over, expect 2 legs. But now we have a double top with bar 10 around 10:30 a.m. So we have a trading range. We stayed in this trading range for some time. Wow, the bears are selling. Okay, so good for the bears. But look what happened. I said if bears want to sell, they needed to close a bear bar below the open of that bar. Not only they did that, they also closed below this bear bar. So they're selling. So again, limit order buyers, okay, couldn't make any money underneath that bar, and they're selling. So what does this mean? That means we're coming back down to the breakout point, which is right there, which we tested before. There's a trend line there, okay? Think about an invisible trend line, right? So that's going to be a breakout of that trend line. We might come down all the way to here and we could bounce there, so be careful. So this area is important, okay? And that trend line is going to want to hold these bears. But I think the bears, this is a surprise bear bar. It's going to get continuation. It's trying to come down. Let me put the trend line first. There you have it. So you have a trend line. Just trying to connect as many lows as possible. So they had a break down, but the bulls bought that. I don't know if they're going to be able to trap these bears selling here. We are coming down here, okay? And if we do break that after the bounce, we're coming down than here. Now, if we do break the Globex low, that's a strong swing down. What does that mean? That means you have a trading range, you have a trading range right here, right? We broke out of this trading range in the London session. That means amount of breakout projected down here. That would put us right at this trading range breakout point. Buyers are waiting at the Globex low heavily, and they're going to try to prevent the Globex low break, okay, by bears. So they're going to try to prevent it at least. But if we do break it, we're going to try to test this range area, okay, this balance zone. Again, buyers are waiting there. So this is very interesting what's just happened here. They jumped the gun. I mean, good for the bears. That bar is, it's going to bounce here because it's breaking the trend line. Now, you can also take your trend line a lot more. Let me see if I can actually take it from here. Maybe from there. There, so that will be the third touch. So we could still bounce, okay? There's several different trend lines. I can take that. Okay, right there. So let's see if this actually holds. And it's kind of holding. You can see, right? There's a gap here. Bulls are probably in that gap area. But I think we're going to continue. Even though we bounce here, a bar like this, especially if they close it in 10 minutes down here, okay, we're going to break this and we're going to test this midnight open. The way that I measure my Asia range, I know I see there are a lot of conversation going on and people are asking me privately too. It's because I pay attention to US. I'm interested in US. So the midnight open US, it's important to me, okay? So the US market doesn't open there, but still Asia is heavily trading here. Sometime around midnight, I look for breakouts. So this is the way I do it. You don't have to do it. In fact, Al actually doesn't even measure any of this. This is just another layer of visual aid that I add to my chart. You do not have to use it. All right, so market broke out. So on the RTA chart, my range is here. Breakout happened, okay, from here. So this is my range, say, right? Or I could take just the bodies and leave the wicks out. So then this area is area of interest and market may come down here. But if we do come down here, chances are they're going to want to, okay, where's the breakout? I'm going to take that. We might actually break out again to the upside. But I think bears want to come down and test this area. So, but let's see if this breakout can actually continue first, right? Because this right here is also a trading range. In fact, it's also a expanding triangle. So if I take it like this, maybe like that, bears might want to come down here, in fact. So we're right at the apex right now, okay? They're trying to decide what they want to do. Now, in order to sell, you need to see two bear bars. The bar one is strong, okay? Now, you need to see bar two not only close bearish, but you also want it to close below the EMA. So we're still always in long, okay? We're not always in short yet. So there are buyers here trying to prevent, hence the expanding triangle apex. So it always tries to hold the price above it. Unless we break below strongly and start to get bear gap bars underneath the EMA, we could quickly come down here. That would bring us here and then furthermore down to this level, maybe even 3795, 3800, which is Globex low right around here. So it kind of adds up. Everything's working just fine, for bears at this point. So I'm watching bar 2, excuse me, I'm watching bar 2 to see where it's going to close. I'm going to name this frog in my throat. So it's trying to close below the EMA. And then let's see if we can actually get a trend from open here. But the target is 38.10 or 38.10.25. That's where the bears are trying to go. That's it. You may want to pay yourself here because we could end up trapping the bears here. Be careful, it's support, okay? Bar 66.78. They're trying to test the low of 66. Just be careful because this area is a buy zone. We might just breach a little bit and test this area before going back up. So as we get closer to where I put midnight open, 38.10, okay, we have gotten very, very close to it. But what do you notice? That those two trend lines, no matter how you put it, okay, it's acting as support. Because bulls know because 1 point, this is only the third touch. And some bulls will try to prevent this breakout. So they're going to try to trap these bears trying to sell. And on the smaller time frame, you're selling into support. Now, bar 2 with 1 tick closed below the EMA. Okay, so that's fine, but it's also double bottom at the EMA or the triple bottom. Okay, so however, we didn't gap down below the EMA. However, it's 2 bar, okay, bear bars. So that's sell the close. That's bear trend from the open. And the second bar actually gap down at the open. Notice gap down. Bodies are gap down. I don't care about the wick. So the bears are still trying to bring price down. Again, you opened up in the premium area, okay? That means nobody wants to buy this high. That means market thinks this is just too high. It needs to come down a little bit to give bulls a better price, okay? It's also, look, double top, maybe, okay, and we breached above the double top. So this entire area was liquidity, and that liquidity tested. So if the market makers want to make it look like bullish, they already did it, so they trap these bulls. Now they're trying to sell it, but they're also trying to make it look like bearish, but this is support here and a breakout point. So we know buyers are waiting here. So when you're selling and you think the market has come down all the way here, which may be, but I'm not worried about that right now. This area is I'm worried about. They're going to make it look like it's bearish only to trap those sellers joining the market because they see something so bearish, and they could just make it go right back up again. So be careful there. So chart the way I'm charting, okay? I have a expanding triangle. And we're at the apex. We're trying to breach below it. They're trying to test bar 66 low. They're trying to test still 38.10. But don't be surprised if you start to see bulls coming in very fast. Because you're trying to sell into support here. I can reach the Brooks Trading Course website. I don't know. I don't think it's down. Maybe refresh your browser. Let me start again, see if it actually. Nope, it loads very fast. Now, can we go further up? I said bulls could show up here. I think the sellers are waiting inside bar 1, lower 1/3 area, somewhere around 38.20, 38.19 area. They might be waiting to sell the pullback. So if you're buying, be careful because you'll be buying into also a bearish pressure. think about it this way. Bears want to sell. They're already showing you 2 bear bars at the open, okay? So, but if they're selling into some kind of support, they're not going to do that because they're smart enough not to do that. So what they're looking for is make it look like going up, but that's actually a pullback for them. And then sell somewhere here and then get another leg down. So if you're trying to buy this, I'd be careful because all this can do, it could just go up to 38.19, 38.20 area and then still sell from there. The US starts, the new day starts, okay, at midnight. So I'm only looking at what has happened before midnight, and after that is a new day. Okay, so that's what I'm looking at. I shouldn't maybe call that an Asia session, but it is the Asia session. After that, okay, you're gonna get slowed down. Asia is gonna slow down because everybody's almost done with the trading. Around 2 o'clock, okay, the London starts to begin. And the EU session, Frankfurt joins around 3 o'clock, and then you get busy. But around this area, what I'm looking at is a brand new day for US. That's what I'm looking at. So, and this is what the banks are looking at, and that's what I take as Asia session. You don't have to do it. You can just take the whole Asia. I used to. You can take the whole Asia all the way to 2 o'clock. Just take that. Doesn't matter. It's just a measurement. That's all there is to it. The reason why I stop at midnight, because midnight ends and then the new US session begins. So that's why it's called midnight open. That's what I'm looking at. The way that I have, there's a, you can read a document called Overnight Drift. It's written by the Feds. And it's a great sleep aid. I posted once or twice. I'll post it again, or you can download it also yourself, the updated document. It kind of explains a little bit in there, but if you can catch it, I got very tired of reading. It's gotten very difficult for me, but then I start to get just of it, and I spoke to a bunch of other traders, and then they kind of said the same thing, said that's what they look at, what happens after midnight open, to get, what the US will do. So I started studying months and months and months worth of charts, just this setup. And then I realized how much this area is respected within the Globex session. So that's what I started to use, and it never tricked me into doing anything wrong. So I respect it. But like I said, you can use it from 7 to 2 o'clock. You would be just fine as well. Doesn't matter. So what I'm looking at here is roughly what Asia is, okay? Right there. All right, so we came very close to the midnight open and the Asia low, okay? Again, you don't need it. Trend line is already telling you that the buyers are waiting eagerly there to stop the bears in their tracks, right? So now we're pulling back up. Now, there's a 1 bull bar 3, and sellers did show up above that. We couldn't pull all the way back up to where I thought that we would, because there is pressure here. And then when you see a 1 bull bar, okay, after 2 strong, okay, closing on their mid or low level bars, there are probably sellers above, and they want to sell it. So also, here's another way. So say you sold underneath bar 1, right? Say you sold underneath bar 1, and you got stuck. And if you didn't actually take any scalping profits, right? And you're stuck. What are you going to do? You're probably going to sell about 5 points above. So say measure 5 points, right? So approximately around 5 points above where you sold, they might be actually selling. Now, they might also sell 10 points above, which is right around here. Happens to be a little bit above the midpoint of bar 1. So these bears are stuck now, and some sold here 5 points above. Okay, they just sold it, and they may not have gotten out yet. So they're probably going to sell a lot more up here, so that's why this bar can actually go higher. So it is going to what I said it's going. So 38.19 or 38.20. So some 5-point sellers, they're trying to break even, okay? So if you actually sold here and got stuck, so the 5-point was right around there, where are you going to exit out? Where's your break even? Right there, 50 point, that dotted line, okay? I'm sorry, 50%, not point, 50% right there. So some of those bears stuck underneath bar 1 with a sell stop order, sold inside a limit order market, are trying, oh, they just got break even right there. Good for them, right? Right there. So I measured about 5 points. They sold, and now they're breaking even. This is all explained to you in the scalp. What is that? I posted over the weekend underneath All Things Trading or ES Read Analysis, maybe? Nope. All Things Trading. There's a video I posted from L. Brooks, Scalping Series, okay? He actually explains in depth, okay, how you break even, right? So go watch it. Now, if some of the bears, if they're not able to get out, they're going to sell another 5 points, maybe 10 points above, okay? And they're still trying to get out. So now you have one bar, closed bullish, bar 3. Now you have bar 4, continuation, okay, also closed on its side. You're trying to get the third, they're trying to get the third bar. They're trying to create a momentum. But this is getting dangerous for bulls as they're trying to buy against a strong bear bar. We know there are sellers here. So what is ATR? So I'm going to see how much these bears are going to sell here and scalp. Let's see. ATR is about 550. So this might come down half the ATR, say 2.5 points. And then they might try to get a 5-point one time the ATR. But I don't see this bar closing yet. So there's still 2 minutes and 45 seconds. I'm not going to sell here. I need to wait for this bar to close. Okay, so it did tag 38.20, even 38.21. Let's see if there's going to be some sellers here. That bar is breaking out. I'm not selling anything. All right, so this breakout bar on the Globex is not getting continuation, and that's not good. And I warned you about this being the apex of the expanding triangle. Expanding triangles are trading ranges. And bottom of the trading range also, the buyers here, they were there, so they're probably there again on the higher time frame, right there. I said, don't be surprised if the bulls show up. They're going to try to reach here, but without closing below this level, nothing is bearish. So you cannot expect to sell, okay? You should expect to be stuck. So, and then another thing that I'm keeping my eye on is the RTH 1 hour chart, okay? So I'm looking at the hourly bars, and I said, look, we're opening right around here at the 50%. The goal is to keep the price above it so we can get back up here. And I did say they're trying to overlap a bar with that bull hour and then eventually go up and overlap there and then test that area. And I said we need to thoroughly test the 50 SMA above the 50 SMA. So expect some kind of bullishness, okay? That was really nice, bar 1 and 2, but where is the continuation? I said if we're going to get continuation, we need to test the 19 and 20, 38, 19, 20. If I see a bear bar, I might sell it, but I don't see it. No way I'm going to sell that. This bar just went up. So this is how I keep myself out of things, sudden things, or things that might surprise the heck out of me, or things I might think might happen. And in case if they don't happen, I have a plan B, okay? So I was getting ready to sell this with a second leg down. They already got their second leg and they got trapped. Some of the bears got out. I mean, like hanging on to their teeth got out, which I explained how and where, okay? But immediately after they were shaken out, they turn into becoming bulls, right? So now, would you buy this bar 5? Would you buy the close of bar 5? Now, I would hesitate. First of all, I would not buy it because this is 15-point area for bulls to actually scalp. So they might be scalping. That's number one. Number two, it's testing this area, okay? So they're probably sellers, and there might be machines actually wanting to sell that close instead of buying. I will let them sell first. If they do close the bar bullish, then that's fine. I think they're going to try to break out now, okay? Maybe test that trend line and break out. That I would join the party. But see how they sold it? I want to see that the bears actually selling this and then failure to close that bar bearish. Then I might join, and this would be my target right there. So can today be bullish, like I said? Well, it looks like it wants to, right? It's trying to stay above this trend line on the daily. It's trying to still test the 50%, which test now it's trying to get to the 66% of last week's range, right? And on the monthly, I don't know, price might be trying to get back up to this level. I don't know about that yet. So all I know is that if today is bullish, can we actually continue to go up? Sure, we might. But let's see what happens here. This bar hasn't closed yet. I did not buy the close of bar 5. Because if they do close bar 6 bearish, then you know this could be exhaustion, top of some kind of a trading range. Could it come down? Sure, it might actually come down all the way down here. But I need to wait for the bar to close. That's where I'm going to get my information. I think the bulls are trying to reach 38, 30, 50 area, 38, 30, 50 area, but let's just see. So if you actually measure from here, you're at just about 9-point, okay, or 10-point area if you measure from there, okay, or if you measure from close, doesn't matter. You're in the 10-point scalp. I said 15 if you paid attention. Why? And they started to buy here, so we're at the 15-point. Look, they just took profit. So that bar is actually, bar 6 is actually profit taking. Profit taking began with bar 5 high. You can see the wick. And that's another reason why I did not want to buy, because I need to give these guys enough room to take profit. Sometimes profit taking can turn into a selling if we are at some kind of resistance or top of a trading range and there are no more buy orders. So that I would know if the bar 6 closes on its low, strongly bearish, and gets another bar, opens below that. So until then, until it closes, I'm going to let them take profit. Now, if the profit takers get out of the way and there are no sellers in the market, that means no sellers, new sellers not joining the market. We could end up with a bull bar closing on its high, taking out the high of bar 5, and that means it wants to continue higher and it wants to break out from the prior high, bar 1. Sure, I'll join them, but I don't see that yet. There's still about 10 seconds left. I go chart to chart. I know some people get confused because they want to see the same thing, same chart, but you can't trade that way. And the reason why Albrooks has daily, weekly, monthly, and hourly charts along with the 15-minute Globex is because he's looking at everything. So, you can't get the full picture without looking at the full picture. Well, that sounded very rhymey, but you understand what I'm saying, right? So why did the bulls show up here? The trend lines, okay? and we never moved below the midnight open. So now you understand why that midnight open is important. I would have sold and gotten maybe even a lot more excited about bears testing down here, maybe even breaking out, going to that balance zone all the way down. But not only the trend line, didn't break, and no bear bars below midnight open. Look, same thing. Look, yesterday. Let's take a look at yesterday. This is yesterday. Okay, look. Do you see how midnight open held a beautiful double bottom? I entered my long right there. 2 consecutive bull bars. Expected this high and that high to be broken. Not only it broken, it gave me a gap bar. So that means not only I'm going to stay in my long, I'm actually going to look for a measured move target. You can measure from there. I didn't measure from there early. I measured from here first. That was my first target, okay? And that's where I took profit. But look, after market opened at 6 p.m. Eastern time, they continued to go higher. Or you could say, this time I'm going to take this. That's going to be my, not only they went above it, they gotten very close to that, okay? But they got trapped and then start to come down. So you can adjust your measured move, but all because of that happened, all because of this area held. Now let's take a look at what's happening here. The day before, right? Market is selling strong. Look, they came down, tested the midnight, and they continued, but no continuation bear bar. So there's only 1 bar closed, but they sold it because that's good enough to sell a little bit more. Maybe expand below this Asia level. They did a little bit, but Asia low at this time holding. So we're not coming down here. So there's no guessing, okay? I'm taking the Asia low and I'm taking the midnight as my criteria, okay? I don't see another bear bar. We're never going to come down here. In fact, we're going up. We try again. We're going up. We're trying again. Once, 3 times and a wedge, and we got a big bar. I bought that right there, and it just went up. Remember Friday? How excited we were because we were trading this. That was over a $4,000 reward for me. that was just an amazing close. Anyway, but you got the point, right? Similar thing. Look, we moved under strong. Midnight open. We're at the highs. Goes and tries to test it. Look, we're bearish as long as we're below it. There's nothing to it, guys. It's just you got to find your niche. This is how I found my niche. This is a lot of back testing, figuring out my eye catching on things, okay? Everything you need is on the charts. It's just that you have to spend time and look at it. And then you can even build your own strategy, own technique, and you could just trade that every day. All right, so we're going sideways. We're in a trading range. Now, bulls have 3 bars and a pullback, bar 6. They're looking for high 1. If this bar closes on its high, it's probably the high 1. But high 1 was here. They might be looking for high 2. Now, I'm not going to buy anything here because bar 6 is a strong bear bar. It didn't close bullish enough. So what's happening here? These bears stuck here might be selling around 10 point from there or 10 point from above. See, they're still selling and they're still trying to get out. They're still trying to break even. So if you actually sold here and you sold again, 10 point was around here, they got another chance to break even. Look at that. Look at that. Now, did they get out after selling extra 5 points above the original place they sold? Yes. Now they're getting out. As they get out, they close their short positions. They buy back their short positions. You end up getting this bounce. Are there new buyers in the market? If they can close this bar on its high, it might actually go higher finally and get back up here. So bulls need to go close above this gold line to become more bullish. Now bears are looking for wedge, lower high, and sell again. So we're also in a trading range on the Globex, trading range, buy low, sell high. But I think we're going to try to get back up to 30.50, like I said, 38.50, or measure 20 points, or from here measure 15 points, like L would do. That right there is 15 points. If I measure here, that would be around 20 points. So I think that's where the bulls are trying to reach. Either or. Also, I want to show you guys something else. There was, or was that ledge? I don't have that in here. Okay, so if I go to 5-minute chart, I had, where was that? I said there's a, I had, where was that? I said there's a ledge here. Yeah, so you had, no, for some reason I no longer have it. Okay, so there's a 3-bar ledge here. Okay, bulls might be trying to reach there and test one tick above. That's another reason why I said 38.30 is there 38.50 I said, so they can actually go up a little bit and then come back down. So there's a 3-bar ledge there. I actually saw a 4-bar ledge. Let me see where I posted. It was right before the open. Hang on. And then we got into market psychology conversation. And then we got into market psychology conversation. Yeah, so that was around 8:37 a.m. Yeah, so that was around 8:37 a.m. I don't know. I don't know what the heck happened to that ledge. Something's changed. But anyway, so there's a 3-bar ledge right here. Maybe I didn't eat enough coffee. I don't know. Have I seen something wrong? All right, I can't waste time on that. But there's a 3-bar ledge, and that's where I think the bulls are trying to go, and they're probably going to test minimum 1 tick. So that could bring us to, if they go a couple of more ticks, that will be my target 30.50, 38.30.50. Okay, so I like to see, take that. That's a 29.75, 19 to 20 point or the 15 point right there. 19 point comes to literally 29.75, so I'm right. So let's see if the bulls actually, if my calculations are correct. Measuring from underneath bar 3, this pivotal level, I'm going for 20 points. In general, the profit taking may start at 19 point, which is right there, and 19 point happens to be 29.75 ledge. So let's see the bulls can actually push this. It's this high is still preventing the breakout, but that's normal. So it's the 1-time bears try to sell, fail. 2-time bears try to sell, fail. They broke even for the 2nd time and got out after selling 5 point here and a 5 point there. Now the bulls are trying for the 2nd time to break out. When the breakout happens, the first profit taken will be at 29.75. It can continue to go up a little bit more around this trend line is, I think, the target. A little bit more around this trend line is, I think, the target. Let's see if they can push this further up. Now, if you're buying, say you have one tick above bar 8, you put a buy stop order because you're expecting a breakout. You have not yet filled. But if you bought the close, you're buying at the top of a trading range, hoping there will be buyers at the close. This bar actually opened below the close of this bar. Okay, so it pulled back a little bit, but are there sellers in the market? I don't know. I don't read the order flow. So Richard would be able to tell us because he reads the order flow. But I'm reading the bars. So if you put a buy stop order, basically you have not yet filled in. Now you're filled in and it breaks out quickly. It needs to give you a 1 point first. So you would get in with 38.27. You would want the scalp at 38.28, and the price needs to go to 28.25 to give you that 1 point initial scalp. You're buying at the high of a trading range where, think of this as a trading range, there are sellers there, okay? That's why it's struggling, because it's a 1, 2, 3, 4, 5 bars limit order market. So there are more sellers at the high of the trading range and the sellers of open of bar 8, okay? So those guys are still trying to do what they know best. Limit order is a limit order, sell the close of a strong bull bar. But once they run out of sellers here, if there are no more sellers, we could continue to go up and that becomes a stop order market. So the early stop order buyers entered and they're not happy. They might be buying down here at the 50% of this bar, okay, because think of it as a trading range. You want to buy the pullback. They might be breaking even because they're not happy. Or you would put your stop order above this bar and then you would expect to get filled, because if the price goes up there, that means it's telling you it wants to break out. It's testing the prior high. That would be a lot safer to buy. But always remember, if they sold, they're probably buyers between there and 5 point area. So I think that we're going to try to push higher, especially if this bar 9 closes on its high. I'm counting points, okay? So I get an initial, okay, I just got, hold on, I'm trying to take profit here. Oh, it just comes to 29.50. I got filled and I'm out. I got filled 1 tick below right there, but it's going to go up 1 tick above at least. So you can still hold on to your long. This bar isn't closed yet. It's, you know, but I said, I don't like any of this and we're about to test. And those are the targets. So I put my exit order 1 tick below. It came in actually twice and it filled me and I'm out. But look where they closed this bar. This is a continuation bar. They're probably going to go at least minimum 1 tick above that ledge. So you're safe. Okay, so hold on to your long, and they should test at least 29.75 and then go furthermore up a little bit, at least. So I made money. I trade what I told you guys. But if this bar closes bearish, then that's a problem. I don't see a reason to get out right now. So I'm going to switch back to RTH. So it was like this. Okay. They haven't really reached. They just 1 tick below. Machines start to take profit because machines know that there are a ton of orders waiting there. What is to do? Like you're at the ice cream, okay, parlor, and you see a line. Don't you want to be in front of the line, right? So hours before, you might send somebody to wait in that line for you. You just give that little kid $1, okay, or money for the ice cream so that he can buy an ice cream for you and for himself. So it's like, think of it that way, right? You want to be in front of everyone. You want to get your ice cream before. So I generally sacrifice that one tick. And that's how I got out, and I'm watching them. I'm enjoying this entertainment now. They're like going, oh, this is the 3rd time. We can't still get filled. Oh, no, this is the 4th time. We can't get filled. But it's going to go above 29. There you go. There you go. Oh, my gosh. Look at bulls. Look, if you actually measured like L does, now where are they taking profit? Where did they test? Not all, if you're measuring from here, that's a 20-point. If you're measuring from here, that's a 15-point scalp right there. That L Brooks right there. I mean, if I'm wrong and if L is listening to this, okay, he'd come back and say, this is total nonsense, Rose. You just made this up. But I'm not. This is how you measure. Anyway, so regardless of all of this, right, what do we have here? If you are a pattern trader, you already saw, right, the bears failed here, and we kind of knew, right, this was the apex of the expanding triangle. Bears failed. Bears try to sell. That's actually the 2nd leg trapped at the EMA. You get a micro double bottom, another double bottom, triple bottom, and the bears fail. And I warn you, if they fail, that's another reason why they would fail, okay? We're going to go right back up and look at it. And on the higher time frame, I said we need to stay above, or at least test thoroughly above the 50 SMA. Now, not only they're testing thoroughly, they're actually trying to get to the 38.49 area. So, Globex high becomes magnet. Now we're testing the way above this, okay? And they're trying to get possibly a wedge here, so they might try to get up there. Or there's already a wedge, okay? We're going to get a failure to test this high. If we make a lower high and then come back down, it is possible, but we're in a bull channel. Or what we're going to do is we're going to close a huge bull bar and we're going to get a measured move. Or you could say, here, I'm going to get rid of all of this. What do you see here on the ETA chart? A trading range, right? Amount of breakout may be projected to the upside. So if I take this, maybe China, that's it. This is the trading range. I'll take the whole thing. Or you could say, no, this is the trading range. We fake breakout here, and then a fake breakout there. Amount of breakout, amount of breakout. Or you could just take this and put it up there. So it's trying to reach places. It's breaking out. Okay, but 20-point or 15-point, these bulls need to take profit. So we now have a 2nd leg up, leg 1, pull back, leg 2. Bulls need to show us that they can actually close above the Globex high and break out and get to this target. This is the area that I'm interested for bulls because that area is sell zone. They sold very heavily there before, so there are a ton of sell orders waiting there. And that kind of aligns with this target right here. But be careful on the 5-minute or here, doesn't matter. We might come down a little bit to test this trend line before going higher. Or we're going to trap the bulls and we're going to come down. Now, anytime you make a 15 or 20-point run, okay, now they might be going for the 20-point, which is right there. They're going to take profit. So it's going to come down. So you can say, I think I'm going to get majority of my, contracts here unloaded. You can leave another contract to run even higher to these levels or to that level, okay, on the 1 hour. But that will be your runner. I would say take whatever you can off the table right now. Pay yourself, because it's going to come down a little bit, so that you can leave one contract to run to the 49 or 49.50. Now, we do have a breakout. Okay, there's probably a measured move there. I can take that. So runner can go up there, which is closer to the 49. Okay, or you could say, no, I think I'm going to put my stop here. What's the purpose of doing that? That's not a good place to. Okay, I think we're going to push higher. So that means price can actually go up to next 30 point, which is around here. Okay, or just say that's probably 40 point. This is where the bulls are trying to go. Right there. Now we reached that target. Good for the bulls. We're not going to go higher if they cannot close that body above that dash line. Okay, I need a bull body closing right here to get to here. I need that bull body closing here, or at least get closer to it. Even if they cannot breach above it, make that wick as little as possible, and then the next candle will actually probably go and close above that. But you do not want to see this bar collapse, okay? You do not want to see that bar collapse because they're taking profit. Like I said, they will take profit and it's going to come down. It is coming down. Nobody wants to sit here and see their reward diminish. That's why I said take profit. That's why I said take profit. So that should answer your question, Emil. I read your question, but I couldn't address it. Sorry, it got very fast there with the price action. But that should give you how I measure and what I look for. So everything's clockwork. Nothing should be surprising to you. Sometimes you're going to be surprised, and those are the news, or the news that is not scheduled, but just to play with your emotions. We used to get that a couple of years ago. Oh my goodness. Every time Trump said China, all girls would go nuts. Oh, please don't say China because I'm really making money here. I don't want to lose it all. I mean, there were points back. I was trading with a bunch of other traders, my old job. I mean, we had our own moderator room and we would talk. Many of us, including myself, I am really scared to trade. I am scared to open a trade because it's all over the place. It's like market is, nobody knows what it's going to do because one person keeps saying China and China and China, and we're all over the place. There were pro traders, they even said, I'm really scared to trade. And that's when I remember taking a pause and I was done. For a while at least. It was tough. So I'm really enjoying the regular price action. All right, so bears are trying to prevent a Globex range breakout here. So if this is the only breakout they're getting, that's fine. That target is met. But I doubt it. I think this is just a pullback to this channel, the trend line. Or if I connect that high and that high, we might still pull back a little bit. What if this is a bull trap? Well, if you do get a huge bear bar, it might be a bull trap. But if there's no bear bar, then we're going to go back up here. Limit order buyers looking for a pullback to buy after this profit taking. They try to buy a little bit here, but it might pull back a little bit. Like I said, it's going to come down to the trend line. So now it reached the trend line. Now they need to prevent this body from closing right here with a bear. If they do close it right here, 32.50, like 32.50 in 3 minutes or beyond, it's because bears are trying to come down to 29.75 to 28.75 area. I am not going to sell this. They can do whatever they like. I'm not going to sell this, especially when the bar is still printing, because this trend line will most likely hold, and the bulls are going to continue their journey to the higher prices. So we were in a premium. We sold a little bit, and that was good enough for bulls to buy. Then that tells me that bulls want to mark up the prices, the contract prices higher. So I said we're going to test the trend line. There were buyers, limit order buyers there. Now, can we go higher? Let me see if I can calculate this. So 34, take out 2, 4. So this is trying to go to 38.75. I think. Yep. So 38.50, 38.75. Let's see if they can make it. And if they do close a bull bar right here, right there, if we start to close bull bars here, we're definitely going to go to the 40 point, which is right around here. Oh, really? Oh, really? It's Luke. Oh, it's Luke. Oh, sorry. Not Luke. Sorry, it's Luke. I didn't know. Well, I'm so glad to hear that. You know what I'm talking about. That's when I was actually trading. I switched to micros. I'm like, I can't do this. This is just too much. So, and I don't want to stop trading. So the micros were the best thing to do. Back in the day. Bulls trying to go to right there. And if they do close a bull bar right there, we're going to continue to go up. But really, on the Globex, I need a bar closing above that line. I need a bull bar. Bulls are continuing to go up to 49, 49.25, I'd say, or 49.50. Bears failed to close the bear bar where I said I would like them to close, but the bar hasn't closed yet, so there's still about 30 seconds, 25 seconds. So if they do close a bear bar at 32.50 and below, or 32.75 and below, they can still bring the market down to the 29.75 or 28.75. Without seeing that bear bar closing, 32.50, 32.75, I am not going to sell anything. In fact, this is going to show me probably it wants to go higher. Now, there might be some limit order sellers above bar 12, but again, I'm not a machine, so I'm not going to sell blindly. But watch this bar 13 test above 12 and then come down slightly. See, it's already started. Oh my goodness. So that right there is the limit order sellers right there at the high of 12 and above. Again, I'm not going to sell. I'm not interested. There's nothing to sell here. How are you guys doing over there? Is this interesting enough? Today is pretty good, actually. So we have failed bears, bulls took over. Okay, so we have a now bull breakout. We have bull gap. That means we're going to keep pushing higher. Okay, there are buyers probably above bar 11 also. Limit order sellers, they try to sell a little bit, but they failed, so we're going up to test the bar 11 high. So I would take profit around 39.25, 39.50 if I were you. But the goal is to get to where I mark right there, 40.25. That's where they want to test. Bulls want to actually close a bull bar there. If they do close a bull bar there, we continue to go higher because Below bar 12 becomes your stop placement. Those who bought right here above bar 3 into this failure, okay, and then they bought more, now they can move their swing stop underneath bar 12. But we need a solid bull body closing above bar 11 for that. Right now the stops are here. Stops from here moved here. Okay? Why? Because the bar 10 closed above the prior high and it's bullish and it's continuing to go up. Bulls are on the higher time frame, trying to close above this area as a criteria to get up to here. So they're swinging. They started the swing around 10 o'clock. Okay. Now, could this actually go higher and higher and higher all the way to bar 40 and even 50? Sure, we could. But this area is going to challenge us. Anybody who bought above high 1, which is bar 12, they're buying the high 1s. High 1 means, okay, basically, if the market is buying, if the bulls are buying high 1s, and they're not waiting for high 2, that means market is in a bullish trend, okay? And the high 1 is as good as high 2. That means they're rushing to get into the market, right? So here's high 1. You could say another high 1, or you could say high 1, high 2, high 3, if that's how you're counting. Now we have new high. I would say this is the new high 1. They're trying to get up to that point right there, and they want to close the bull bar. If they do, they're going to try to push towards measured move target. And look what just happened here. Look what happened here. This is something very important happened here. I said take profit here. Everybody took profit. Then the market came down. At one point it was down here. I said bears are trying to prevent the Globex breakout, but if we have that bar above it, they're going to try to buy and keep going higher. So now what? We closed above a bull bar, not the strongest one, but we did close above Globex. So this area is now an interest to me. Now, something failed to happen here. We did not close a bull bar where we're supposed to close, but it's still bullish enough, okay? But I don't like the fact that bulls failed to close that body with bar 13 right at the 40.25. I needed that bull body. So now we don't have it, and now that's a problem. So some bulls will start to take profit. Some bulls will wait for this bar to close, okay? And if it closes bullish, they're going to continue. They might even add to their long, okay? Or if they see a very weak bear bar, they might still stay in their positions, but they may not add. Instead, they might actually put the buy stop one tick above bar 13. So some of the bulls will probably going to get activated there. So then we would have a bull bar closing, then we're definitely going up here. In fact, we're going to try to get to the 30. 30 is right there, but at this point, I don't really measure for 30. I go for the full trend target, 40. That's it. Now close that body right there. And those who bought right there, we're reaching 1, 2, 3, 4, 2, 1, 43.25. There will be maybe some profit taken there, so be careful. That's 4-to-1 risk reward. $43.25. Now, at this point, if you're entering the market, you're basically chasing. Okay, so look at the bars with upper wicks. That's not good, right? We're not getting bars like 8 or bars like, bars like 3. So, yes, they are good. Bars are still closing on their highs, but I don't like those wicks. Like this bar, 13 should have had a smaller wick. So that's why I said I think we're reaching somewhere that we need to pay attention, which is 4-to-1 risk reward. There might be some brief profit taken here, but if we do close above it, then we'll go to my measured move target. So you're chasing here. You're entering way too late, okay? But if you do enter, your stop is here. So you say you entered above that. You're trying to get to 2-to-1. Your stop is below 12. You're trying to get there. 38, 45, 50. You already made 1-to-1. You should have, okay, you bought the high one tick above 12. You should have scalped here 1-to-1, and you're going for 2-to-1. But you're chasing. Or measured move, your stop is down here. You entered with the breakout bar, your 1-to-1 target 48.25. Somewhere around 38.45, sellers are waiting. Be careful. ATR is not that big, so we might overshoot it maybe 1 or 2 tick, but we are going to bounce from there. Not just because it's, pit stop, but it's also confluence area. Okay, that's a 2-to-1 if you bought above this, and we already, that's 4-to-1. They're testing now, and they're overshooting 4-to-1. We could still come down from 38.45. That's a script. That's paid script. It's private. I'm not sharing that. You can use one that I didn't post. Lyndon, another user posted in the scripts. Go there. Let me see if I can. If you go to, where is that? Indicators and scripts. Look for either me or Lyndon, username Lyndon, but you have to scroll up quite a bit. It is, what is that? Goodness. Lyndon or Rose. Then you'll find it. It's there. I'm just trying to find a name for you. Okay, I'm going to give up here now. Lyndon. That didn't work. I'll post it again if it's not there. I can't find it. I know it's there, but if you cannot find it, just message me. Okay? I'm going to be lost in this rabbit hole if I keep continue searching for it. It's basically this indicator. So here's my stop. Here's where I entered. That's it. So that would be 1, 2, 3, 4-to-1, according to this. This is a lot more accurate. So we're at the 4-to-1 right there. So I would use this one. This is done with the Fibonacci levels. It's a lot more accurate in my opinion. So use that one. So they're reaching for 38, 48, 50, but we're at the 38, 45. So if you want to pay yourself here, that's fine. But you should have a runner going to the 40-point trend target. Oh, wait, it's already there, sorry. Can we reach higher? Sure, we could reach higher because there is a bad price action here that we actually close these gaps. Now we're going up. We might even go all the way up here or to this level. But we need to take profit here a little bit. So this was a great trap. Bulls actually trapped the bears right at that 2 trend lines. that I put in for you. Right underneath, fake breakout, immediate trap, and they continued. So you could have bought either above this bar, that bull doji, or the close of that bar, and that would have given you also similar, okay, 1-to-1 measured move target. So we're bullish, good for the bulls. We reached an important target. There will be profit taken here. It might just go up a little bit. Where are we now? So we tested 47.50, 48.50 measured moves. You generally meet the measured move, but before you get to the measured move, 1 point below the measured move target, profit taking begins. Okay, it's going to scare you a little bit because there are chickens there. I call them chickens. But it should meet 48.50. That should have been a problem. And in fact, it should actually go beyond it and test the 40 point, which is right around there. It's nothing. There's no distance, to worry about. It's just right there. So 38.51, 50 or 51 area we should actually reach. But if you want to take profit here and you don't want to wait for a bear bar, then take profit. Momi, have I answered your question? The ledge was here. A small ledge. And we ended up closing above, and we're now way above. So I took that as the market wants to get above that level. That's how I took that right there. And that was another reason why I did not want to sell. But now it's getting a little bit high here, and we have a micro double top, bar 15 and bar 16. But the bar 16 hasn't closed yet, so I can't really call this a micro double top. As is, yes, but let's wait for this bar to close first. So right now is machine see a micro double top, and they might be taking profit. Now we don't know if there are any sellers in the market, the new sellers. So what's happening here is that we reach certain levels, whether it's a risk reward or we come very close to 1 point close to the measured move target. We're far away from the EMA. That tells me there must be some kind of a wedge, maybe a parabolic wedge, up on this, down on this, up on this, down on this, up on this. So we do have a 3 push top, but I don't have a good sell signal yet, so I can't really sell this. What this is early profit taken. So this should continue to go up. And then we're so close to my actual target, which is right there, 38.49.25 or 50, whatever. So hold on to your long, please, because we will test that 40-point trend. And here's the thing. We are so bullish. We might add another 40 points. So don't be surprised if bulls want to keep this up and up and up. Okay, so, but I don't like the quality of these bars. I don't like the upper wicks. They're beautiful, but they're not like, bars with gaps and small wicks. You know what I'm saying? Like it's going up, maybe get a small bear bar, but then just goes up again. I don't see it. See, it's buy to close, yes. We have gap here. That's good for the bulls. Now, if you also want to see your gap, you could go to a line chart. This doesn't look so good. Okay. It's steady buying, but eventually it's not going to be, sustainable to maintain. I want to see a pullback and a gap. Okay. So it's right now it's trying to reach the 40 point. However, where is the gap? Well, we have some negative gaps, I guess I would say. Is there a gap here? There's a bit of a gap there. There's a gap from that high to the body or to that. I mean, there's somewhat of gap, like there's from this high to that body, there's gaps. So some small gaps, steady buying. So what you're seeing here is bulls are just buying. Machines are buying. They're steady. This is a good trend. No bear bars. I didn't think that selling would be an option until we reached 50.75 at least. $48.50 measured move met. So good job, bulls. Now what? Is there another measured move? No. Measured move bet. So now they have every reason to take profit. But they still failed to test my 40 points. So if you're selling here, it's because you're taking profit, not selling. There are no sellers here. There are profit takers. Bulls are selling. Now, bulls are selling to take profit, not selling to get out of their positions. They're just paying themselves. So this will probably going to continue up to the 50, 75, 51 area. So I would not be too quick to sell anything. Well, yes, you are in a trend, so buy for any reason. They're buying everything. But you can only buy until to a certain level, right? So this has gapped out from the EMA. It's been buying for a while. It's reaching the levels. So you're at the top of a trend. Today is not a trend from the open. However, some might argue that it's actually a small trading range breakout. You could call this a big down and a big up. Confusion comes down a little bit at the highs. Remember when I was reading bar 5, I said I wouldn't buy the bar 5 close because you're forced to buy at the high. This is still a trading range. So you just wait about 7, 8, 9, or even 12 bars if you want to get in. Now the breakout happened with bar 10, pullback with bar 12, so you could have still gotten in there and still made money. It broke out after a opening range, basically. Machines still want to test and tag the 40-point zone. It comes so close, like as soon as it comes down, it just jumps right back up. It's because machines are not allowing to sell. They want their big ticket item, which is 40 points. Small pullback bull trend. This is a climactic trend, not very climactic, but your pullbacks are basically bull bars, okay? So if that's what you want to count, maybe here, yes, you could call that too. It's a trend, it's a bull trend. It's a duck, it's a dog, it's a duck. Oh no, it's a plane. Yeah, you could call this small pullback bull trend, but it really is a climactic trend. It's climbing to get to the 40 point. It's got to end somewhere, right? Now, how many bars we have been gapping up from the EMA so far? 11 bars. So we could still stay, even if we come down, I'm going to get rid of this, okay? We might keep that gap open, okay? And then keep going higher, maybe even 10 points. We can even go 10 points above this level I marked before we actually come down, before we start to descend to the EMA. All right, so now I don't like the way this bar 17 is forming. It is an outside down bar, but the bar hasn't closed yet. It's profit taking. If you start to sell this bar, now if you sell it, it's an outside down bar. So it's got some kind of, you could say, okay, I want to sell this bar. I would not recommend you to sell it because you're selling against this climactic leg up and a tight bull channel, okay? So there are probably buyers waiting underneath there. Even if you sell a little bit, I don't think it's going to come down unless they surprise us. So bulls are trying to put a inside 16, outside 17, and another inside bar 18. But let's see how 18 closes. Selling against a tight bull channel, this bull channel probably is going to continue up. It wants to put another leg possibly. If the bear surprise me with a huge bear bar, that I would probably sell. But even then, there are buyers waiting here, there are buyers waiting here, buyers waiting underneath 14, breakout test, another breakout test. So I'm not going to sell this. But it is an outside down bar, okay? It's looking for another bear bar continuation and sideways and get another leg down to the EMA. But I think it's too early to start selling. Now, for scalpers, they want a bear body right here. I'll tell you exactly where it is. 43. 38, 43, they want to close a bear body or beyond. Then they can quickly come down to 38.40 or 38.39. But every time I sell against my early days without knowing what L used to say, you got a bull channel here, the selling, you got, this is probably going to continue higher. So if you're selling, you're going to stop down. Okay, you're going to be stuck. So believe me, I have been stuck many times. And then there was a time I remember, this was my early days, way before I even know about L, okay? I tried to fix it. There was that stupidity. I actually added, I sold here, I sold there. Market is still going. I'm like, oh no, I sold there. I'm like, wait a minute, I can't keep selling this. Now one point I need to hit exit, right? I need to hit close and give all that money back from my account. Like, I'm going to donate thousands of dollars. That was the day I cried. And my boyfriend gifted me L. Brooks' course. I was like, here, go watch this guy's videos. You might learn something. I'm like, what just happened? And, but that was way. That was like a year after. But the moral of the story, their traders actually will sell this, okay, and then they're going to sell here, and then they're going to sell there, and then they're going to sell there, and this is an account killer. You do not want to do that, okay? So this is basically bulls might be looking for a quick pullback to buy. Now, when can you sell? If the bears are printing about 6 points or 5 points, okay, you need a bear body closing below where I marked, which is right there. If you get that, then you might have a sell and scalp couple of points, but is it worth doing so? You don't even have a second bear bar yet. Because more this bar, okay, 18 closes on its high, more buyers will come into the market because they see a breakout mode. So you see a bar like this, don't get too excited, because you some point learn, just like the way I learned years and years ago, oh, engulfing bear bar, let's just sell that close. No. Look what the market did. This is just a pullback. They're looking for another high one to buy. Unless they surprise you and print a huge bear bar, then that's fine, but I don't see it. So we go to the 40 point and we finish the job. We take profit and expect another 5 to 10 points above. We might even go all the way up here. This is how you prevent, okay, earlier mistakes you made or you may be still making. A bar like a bull channel like this, okay, any breakout, tight bull channel, it's going to want to go back and test the high before selling. So expect that test at least. So anybody who bought here, one tick above 16 got stuck with bar 17 going up. They're disappointed. They're going to buy underneath 16. They're going to buy the wick or the close to break even. So if you actually bought here, one tick above, if you buy again 5 points below, somewhere around 5 points, and they did buy, look, that tells me we're not only in a limit order market, and those who bought here, stuck here, they bought here, they were actually break even. Look, break even. So now I watch the market. Okay, they broke even. How come this bar is not going up? If this is bullish pressure and there's 40 points zone that we left behind, why is this not continuing higher? This should actually go and get up here. So now, is the sentiment actually changing finally, or is this just a second leg? Leg one, leg two, counter trend. And the bulls are going to trap these bears again. What do you guys see here? We have inside, outside, inside, outside. I mean, also, bull bar, bear bar, bull bar, bear bar, alternating bars. There's no bearish pressure here. Anybody who sees this and sells it might get trapped soon. It's just that those who sold here, now it's the same thing applies to them. Say they sold this, okay, now they're selling at the high or the close. When I say at the high, if there's a bull bar and there was a bear bar, okay, I'm talking about this high. I'm not talking about way above. They sold in that wick and they sold the close. Now they're trying to break even. They broke even. Now they're even making money. Bears are making money. So there's a shift, okay, a little bit. But that shift does not mean bear pressure or does not mean bear trend starting. It's just that these bears are trying to make money, maybe trying to get out. Soon they could get trapped if they're trying to sell. So I am not going to sell this because I think they're going to get trapped with the second leg down. And then we're going to end up making a high 2. We have a high 1. So buy stop, market is bullish. So people will drop their buy stop orders one tick above 18, okay? And they're going to wait for it to get filled so they can go higher. I don't want to sell against this. Basically, I'm looking for reasons not to sell. Market tries something twice. So I want to see now if bears were strong enough, okay, they could have printed bar 18, a surprise bear bar. Then I would say we're going to go sideways a couple of bars and then make a second leg down. But the bar 18 happens to be a bull bar. So that means bar 19 is just a second leg down. That means we might get a high 1 and a high 2. So the answer your I think I answered Zito's question here. 1819 high ledge. Well, we're too high, so yeah. I mean, we've come so close to the 30 or 40 point. So 50.75, 49.75 is the we have not yet. We still haven't tested this area, so this is just a pullback in my opinion. Let's see what happens with bar 20. There's a breakout point, so limit order buyers are probably there. 2 bars. Some already bought underneath 16. Some may buy here. Now, bears did close a bar 6 points, okay, below. So what they're trying to do is they're trying to get a 10 point and take profit. So they're going to try to run the price to here, either 9 or 10. So 10 is right there, so they're still pushing. Now, that doesn't mean that they're going to reach the EMA. They might or they may not. So they're still trying to come down here and take profit. It could be 1 point above where I mark, 10, okay? But what if they can't make it down there? Do you still want to sell against this? Because I think the bulls are still trying to keep that gap open. Now, anybody who sold underneath bar 17, they're trying to make a 5 point. 5 point is right there. Will they make it? Or anybody who sold underneath 16 and got out because they saw a bear bar. Their 5 point is right where these bears might actually take profit. So we might still come down here and then bounce hard. So if you're selling, you don't have too much space, and we may not come down to the EMA. In order to keep moving this bull trend, we need to keep the gap to the EMA open and not allow any selling all the way until bar 40 or maybe even 50 if they want to keep, buying. So this was not a good setup for bears. I didn't care for this 10-point sell either. And if the bears who sold here or the bulls who got out created this nonsense, that means if other bears are not joining because they don't even see a 5-point scalp, market could just turn around and go higher. So to me, this is just not clear enough to sell anything, okay? I'm just going to stay out of it. 18 is an inside bar, okay? So let me get rid of all of this. So what do you see here? Kai, 7-Eleven. Kai works at 7-Eleven. I'm just kidding. So you get an outside bar, right? So you get an inside bar, 18. Market is bullish. So chances are underneath the outside bar, it's a trap area. Bulls are going to trap the bears trying to sell something that is not even bearish. So every time you see an inside-outside bar, think about where you are, okay? What the market sentiment is. The market sentiment is extremely bullish. Anytime you're trying to sell and breach an outside bar, which we call mother bar, I call it mother bar, okay? They try to sell, it's failed. They cannot close a bear body. A solid bear body, okay, would be a breakout from this outside bar's range to get a 1-to-1 target. We don't have that yet. Every time bears try to sell it, they get trapped. Every time bears try to sell it, they get trapped. So that means bulls can create, this is high 1, 18, can create a high 2 and then buy and test the outside bar's high and break out from there instead and get to my 40-point target, or maybe even 10-point above. So 18 is a decent bull bar. I mean, anything can be a decent bull bar. But what were you trying to do? Were you trying to buy? Well, that's a high 1. It closed on its high, so you can actually park your buy stop order 1 tick above. 19 never filled you, so you're safe. Your order is waiting with a bunch of other orders. Now look at bar 20. Bar 20 is not only a second leg trap of bears, it's a signal bar, and it's also a trigger bar high 2. If it closes like that, especially, okay, it could go higher. It did. So now you have an outside up bar. And the next bar actually gapped up. So the bulls are just trying to reach my 40-point. Hello, I was right. So I'm going to measure that again. That's 42, 40 right there. So now you know why I didn't want to sell, because there's no need selling here. It's deadly. It's like you're willing to jump into a shark-filled tank and die in 2 seconds. And these bears who actually sold and printed a 6-point bar, but it wasn't a 6-point to begin with. It started selling here. They never were able to close below the 6-point. They tried again. That's their second try, and failed again. Their target was down here. They couldn't even reach it. And that's a failure. And bulls know that. It's like, oh, these guys, they don't know what they're doing. There's an outside bar, there's an inside bar, there's an I, there's an O, there's an I. L says it's a breakout mode. Market is bullish. Obviously, they're going to want to break out to the upside, not to the downside. So park your buy stop order above a good, strong bull bar like Kai from 7-Eleven told us, bar 18, and wait to get filled. And you go along. And now is the time to pay yourself because we're at the 40 point. But it can go another 5 to 10 points. So you can mark a 5 point here. You can mark a 10 point here. So we could continue to go high. But look, they're taking profit. So was I right there? Yes. They're taking machines are taking initial profit because they know this is a hard trend, big ticket item. They did well. They did very, very well. So they want to get paid. Now, if no bear bars and this bar still closes up here, they're going to continue to buy. They could put another 10 points, 5 points, 10 points. They need to move 5 points to get to 10 points. They need to move 10 points to get to 15 points. They need to move 15 points to get to 20 points. Emil is so hung up with the limit orders. Let me read your question there. He's trying to get his master's degree on limit order market. So tell me about those limit orders now. Hold on. Let me read it. So yeah, it's reasonable in such situations for limit order bulls to buy the close of low every week. Limit order. Okay, so you have a bunch of bars overlapping. Okay, bull bar, bear bar, bull bar. And think of it as a small trading range, right? What do you do with the trading ranges? You buy low, you sell high. Or if you want to short it, you sell high, you want to buy low. So what will you sell up there? Not a bear bar, but you're definitely going to sell a bull bar close if it's closed strong, right? Because it's probably a failure to break out for that bull bar. So if you sell it, you're probably going to grab a couple of points scalp. I think L goes for 2 points. And then you look for a run towards the bottom of the trading range. So it's a trading range right there. Okay. They're going to buy a strong bear bar. They bought it with 18, went up a couple of points, I think. And then they sold a strong bull close. Bar 18 is a strong bull close. The body closed higher. They sold it. Now they bought it again. So there's no stop order market. Bears are not able to break out. Bulls couldn't break out, but now they are. So to me, this is small trading range, but it's actually two-legged pullback, trap, and go. But you would get that a lot better in here. Right, so this is not very strong. I'm not going to sell this bar 75. Why? It's not a strong bull bar. I want it to go actually close near up here, right? This is a little better. Bar 76 is closer to the top of the trading range. And it's actually a lot better body than this. So they might be sellers above or at the close. In fact, they did. Look, 70, 71, 72, and 73. 73 is a mid-close, but it's not that good. So instead of selling that, they sold the mid-level, but they sold anyway. Really strong bear bar at the low of a trading range. Do you think they're going to buy it? Even though bears look like they were actually selling. So if you put a sell stop order underneath that bar in a limit order market, it faked you out. Instead, it just went up. So buyers there, buyers underneath, because you're still in the limit order market until you no longer are. So that's how I look at it. The quality of the bars and so on and so. This was just a two-legged pullback counter trend with bar 18 separating the two bear legs, and then continuation of the second leg with bar 20 low. At one point it was a bear bar, but ended up closing bull bar. That's also now trap. It went above the bear bar's high, so that's high 2. Signal coming down, going up and closing. Now it's trigger, you're up. You entered right there, and you might even go for a measured move target. There's a little measured move there, so I'm not going to take that. Might take this. Or you could say, no, that body breakout, maybe right there, I'm going to take that. Okay, fine. Look how close they gotten. Or you could say, well, I entered my stop is here. I'm going for a 2-to-1. Good luck. I'm with you. But that's your 1-to-1. Or if you measure with Fibonacci's, you entered there, you put your stop there. Oh, sorry, you entered your stops here, you entered there, 1 tick above bar 18. Oy. That's your 1-to-1. We're just about to get the 1-to-1. I like using this better. I entered there, my stop is here, that's 1-to-1. We should get that. We might even continue 2-to-1. Look where my 2-to-1 is, extra 10 points. That means trend wants to go. So if they do close a bull bar above this price level, 37.50, it is possible that we will go up to 2-to-1 and we will get more. We might even start a new trend up. But what's in between this level 37.50 and the price now? What's in between? What do you guys see? There is 38.55. Who's waiting there? 38.50. Yes. Sellers waiting there. And bulls know they might need to take profit. That's why. Why do you think that we're stolen here? They're confused. I'm sorry, not 37. What am I reading? That's 54. So, sorry. What am I reading? That's not the price. Sorry about that. I need to be able to get that out. That always confuses me. That's the price. Sorry. There is no in between. Actually, the pit stop is right above. So we're going to push towards there. But as soon as we push to the price, 38.54, I have to correct myself there. So that's 1-to-1. Right above it is 38.55. So we might just go there, test, and then come down. So in order to get up here, you wait for the, if you haven't entered the market, you wait for the pullback, which is profit taken. And if you see bull bars closing, then you know we're going up there. Yes, so to answer your second part of your question, Emil, this is actually in the course, okay? So we're in a bullish trend, and this is just a 2-legged pullback. There are buyers underneath the bear bars, okay? And there are also buyers above the prior highs, waiting to buy with a stop order. Limit orders are waiting to buy underneath that bar. Or you got 1, 2 bars, buyers I said waiting there. Also breakout test might be there, but we never reached there. So there were buyers there. There were buyers underneath strong bull bars. Yeah. When I see something like this, I'll buy the close of the bear bar. I'll buy, underneath that. I will buy. I'm not going to sell. All right. So we have a breakout, pullback 22. We had something similar yesterday. Look, breakout, pullback 56, a doji. And then we got this beautiful move, 2-legged move up. Breakout and a doji. So we need to get that 1-to-1 and then possibly test 38.55 or 1 tick below. Now ATR came down significantly. So that means when ATR is below 5, it is 295. So it's, 395 is 3.75. Roll it down to 75. We may not test the 38.55. We might actually fall short by going up to 38.54.75 or 54.50. 1-to-1 target is 38.54. We're probably going to test a couple of ticks above it before taking profit. So be careful if you wait for 38.55 to be tested. We may not. We might fall short for a couple of ticks. Sorry, I just saw your second part there, Emil. I wasn't ignoring. So if you're still holding, we should get that. 38.54. Now, extension for bulls is right here, right in front of you. They're trying to reach here. And that happens to be 38.55 also. Look, they're extended pretty much, so this is pretty high up, okay? You may want to take profit there no matter what. Almost there, almost there. Zito. Almost there, 55. You see how we just got so close to 55? Look what happened. 54.25. We should just go another couple of ticks without failing, but we just got the 1-to-1. Immediate profit taken. Machines are like, we're here to take profit. And then you just see the bodies slam like a couple of ticks so quick. Of course, they're overshooting now that I said all that. Why? Because ATR went up to 475. Fine. They still have to take profit. Can they continue to go up? That means they're trying to get their 2-to-1. That's a great entry. So 2-to-1 is what you should be making minimum anyway. If still going and you took profit here, okay, this is continuation. If you took profit here, that's because you have a runner might be running to the 2-to-1. But you know they have to take decent profit. So anytime, what happens when we overshoot a pit stop every 10 points, it's going to come down, right? A little bit at least. Because those sellers couldn't get a chance to sell, right, at the pit stop. You know the drill. So there's a now big wick. So when you actually measure from, let me get rid of these so you got the point. It's trying to put another 10 points above that 40 point. If you actually measured, well, I don't have it, but where's that? 55, right there. So we're overshooting the 55, right? It's going to come down, but if you measure from the high to the wick, okay, where are they trying to get in? Those machines actually sold right here, 50%. Their goal was, listen, this just overshot. I was here selling. Maybe they sold blindly. They have to sell again to break even. So they're hoping this is going to come down to the pit stop. I think at one point it did. So got everybody out, but it could continue. And it dumps. You see how it's coming down? Now it's going to test this. It's probably going to come down here. It's possible that it might. But first, it needs to test the pit stop that overshot. So if you sold here, you can actually scalp that much. That's a good scalp. But really, this is where they're trying to go, the minus 23. And then further down, it can extend to minus 61.80. See, that's it. Where I'm pointing is the average price that they sold. Now they made their money. Because if they sold here looking for a bounce to the downside, they never got it with this bar. This was an overshoot. So then they're going to sell here. Now they made their money. That was their break even. They might be even making more money. I'm sorry, this was their break even. Now they made money. They want more money by price to move underneath pit stop. It's a little bit tight space. I'm having a hard time explaining or showing rather, demonstrating, but you got the point. That blue line is where 38.55. Price is coming up to it. You want to see a bounce. Suddenly ATR went up. They just broke out of it. That's an overshoot. Now, from the overshoot to the pit stop, I measure. I put a sell order here. If I originally sold here and I sell again here, my break even is here. Not only I got my break even, I also made money. But really, I want them to actually sell and test here and here. What if they don't? If this bar actually closes above the pit stop, I'm done. I'm out. Generally, I get out right here. I don't even care for this. Because market is bullish, it's trying to go to the 2-to-1. It's trying to go up here. I can trade anything. But even, whatever I'm trading, I have rules, right? So now they're probably trying to move underneath the 38.55. I need to see a bear body first. And if we do not close below 1-to-1 with a strong bear body, they're going to keep going up. They're just taking profit. I like to see continuation. But look, we overshot that extension area. That's why I put that little GIF in the trade room. I said, you really need to take profit. We're overextending. Now, if we do close a bull body above it, we're going up here. I need to see a bull body above that. Okay, you see how it's struggling, that bear bar, because bulls don't want to see a bear bar closing below the 1-to-1. They want to continue to get their 2-to-1. If you're risking 1, you should be getting 2. So 2-to-1 should not be that difficult to make. Plus, it was, what was that? 38.51 was 40 points. That's just about another 10 points. No, actually 50.75. Yeah, so that's a 10 point right there. So it kind of adds up well. So if I'm long, I would have stayed in my long and would look for that. But if you blindly sell and you want to act like a machine and you see a level and you want to scalp a little bit, market gave you an opportunity to scalp a little bit, in fact. And that was around, again, from here. $55. Yeah, that gave you about a point, maybe more than a point, 2-point scalp. But you're in a long, strong bull trend like this, you should not be selling against anything. Even if you're taking profit, you should ask yourself, I see a pit stop, it failed to sell, so what does that mean? Well, they're overshooting, and they're kind of strong, and they're closing above it. These bulls are still going places, okay? That means they're not giving up. Maybe you shouldn't leave your, swing. You should stay in it. So I exhausted the reasons why I shouldn't be, okay, a bear in the market or sell against it. So I'm not going to sell against it. But another doji. So that's bizarre. So you got 22 and a 24. So what does this mean? Well, we're getting exhausted a little bit. Dojis, they're not bear bodies. That's a good thing. So at least bulls are not allowing bears to print one tick bear body. They're doing the minimum that they could do, which is a doji. That's a continuation. It's confusion, but it's continuation. And I kind of explained to you why that confusion was there, and I demonstrated how bears try to scalp the market and they couldn't prevail. So bulls showing me, listen, we're still bullish, even though these are dojis, but they're not bear bodies. So keep buying. 10 point above the 40 point extension or 2-to-1 is still target. Now, if you start to see a surprise bear bars, we have a micro double top here, bar 23 and 24. If bears not able to get up, get above it, you also have a micro wedge, 1, 1, 1. Okay, I mean top. So up here, basically, up here, down here, and up here, down here, and up here. Okay, so there's a wedge there. Bulls need to get above it. Bulls need to not allow bears actually sell this micro wedge or double top. If they do close a bar right here and go above it, that's it. We're going to continue to go. That's it. That's continue. Now this doji is a true continuation bar. There's nothing to sell. We're almost there. A true continuation bar. There's nothing to sell. We're almost there. If you learn to read it like this, these days become your moneymaker. You can literally make the entire month or the week worth of P&L. All right, so now this is where I would get, okay, now I maybe need to think about taking profit. So they just touch it and then 10 point, but they can still go 15, 5 more points. Right around here. It might still go. Why? Because that's my target right there. And even further up above is 67. So 67 is 3-1. 20 point is right in between 3-1 and the 4-1. I think we're going to go up here. Go Bulls. Excellent, excellent. So I'm going to put it to 14 to 15 area. So hopefully none of you guys sold anything or you weren't bearish when I told you guys, even at the get-go. At the open, I said, don't be surprised if bulls show up here. Yes, I want to see this test, but look, we did come down. So if you were bearish, I was bearish. I was actually selling that. I sold and I took profit, but I got out because we barely tested that line. That told me right there, this is a trap. Trend lines are generally a great way to trap the bears. That's exactly what they did. They were looking to come down, find new buyers at better low prices to buy contracts. And that's exactly what they did. So if you're still swinging this higher, your stop is underneath bar 20. You're hoping that price is going to go and test that. 15 point, 14 point, 15 point area, and then reach the 3-1. Now, I would get nervous around 3-1 area, which is 67.25, 67.50, 67.75 area. Now, and that's because, I don't know if I can show you here. Yep, so I'm going to hone in on this a little bit. See this right there? I'm going to measure, why can't I, oh. So basically from 58 low to that area, there's a little bit of gap here. Even though there are wicks don't close the gaps. Okay, from there to there, actually, it's still gaps. So I'm going to take all of this. Okay, so basically this is what I'm looking for. Let's see where we are. But I want to look at one more thing. Oh, there's one more gap here too. Let's see if I can put a line there. Okay. And then put a line here. So we are already here. Okay, so we tested this, so this is no more. Right there. They're trying to close above 62.75 or 62.50. I'll make that 75. They're trying to close a bull bar, then they can continue, but this area is sell zone. Sellers are waiting here. And in fact, we could actually go test 4-1 before coming down. But early sellers are underneath the area, but we're going to go up. We're going to go up to this area. So I would still hold on to the long because this has a little bit more room to go higher. So don't be spooked right away. So just give it a room. Okay, so just give it a room. Traffic where? From your bedroom to the office, Martin? I'm just kidding. It's probably you're somewhere in the world that the workday is probably ending and you're arriving home. So let's see. A little bit more room. Somewhere around 38.67. to that purple line or purple zone. This is a very nice bull day. I'm very excited about it, but it's too climactic, I have to say. We're going to come down eventually to the EMA. Now we have, what do we have? What is this? Bar 26. We have been gapping since bar 6, so this has been already a 20 bar gap. So we're going to start the descent shortly once we start to take profit. So we have a little bit more room. Let the bulls get their 15 point and possibly even 20 point. So that's your 15 point. 19 to 20. 20 is right there. I would say they might just hit 19 and then start to come down early. But first the 15 or 14. So 15, 14 is right there. They're already started to take profit. Zones are 2 points, so I think it's going to go to 15 and even test the 3 to 1. So hold on. Isn't that a scene from the Walking Dead? Okay, now you need to think about wrapping up things a little bit. Now you want to really pay yourself because this will come down. This is 20 plus bars gapping now, 3 to 1. Ooh, I like yours better, Napster. Okay, now is the take, maybe profit here, but it might still go a little bit higher, just a little bit. You'll know, you'll see a upside down bear pin bar, some kind of signal bar once they get serious about bouncing this to the downside. I don't see it, so this can continue to climb up just a tad, but they are seriously taking profit right like one tick before the 3 to 1. But we should test that 3 to 1. But if you're scared, look what we're testing. Look, I found that level last week, and that has been sitting on my Globex chart for a week now. Not for a week, I'm sorry. When did that? That's not last week. That was, oh, maybe it is last week. Yep, I found it last week. I wasn't lying. So today's Tuesday. That's Monday. That's Friday. That's Thursday. And that's Wednesday. So bulls are trying to get to the Wednesday high. Possibly. Today's Tuesday, right? Yes. Tuesday, Monday, Friday, Thursday. So that basically is the FOMC, okay? Craziness. And they're trying to undo all of this. But if we sold that much, that means we're hitting a major volume profile area. If I actually layer a volume profile, there are probably sellers here waiting. So we might get slapped down. I found that area and I put it there long ago. So I said now is the time to take profit because we met my 15 point extension from the last, okay, trend completion. Now, can this continue to go up? Sure, it could get another 5 points because we have not tested the zone yet. But let these profit takers take profit. Don't get spooked right now. This is all a profit taking. However, it is looking like a really nice sell signal bar at the moment, but we don't know how it's going to close. There's still 1 minute and 50 seconds. It could close very weak bearish last second, and if you exit out of your position, you would be giving back a lot when price can actually go up here and then sell. But if you think that this is too much of a nosebleed, then just get out. Because you should have made already tons of US dollars. If you haven't, then you learned a lot, and that's priceless. I'm going to take a quick break, and I'll be right back. If you have any questions, please post them. I'm just going to grab some coffee and be back. Because I kind of exited here. I need to get some coffee. Okay, I'm back. That is so true, Travis. Let's run this. Let's make money, and then let's make some money, and then just let's go vote. All right, so, all right. Well, got distracted there. I'm going to get rid of this. Oh, that's there. So I'm going to measure that. That's 5. I need 6 to make 10 or 14 or 15. To close that bar. They're trying to come down to here. So if you sold it, you need to take profit right here because we're going to bounce. All right, some machines are already taking profit, and they're sold underneath here. So you can also say anybody who sold here, they're looking for a 5-point scalp. So price can go to my 10-point if you're measuring up here or there and then bounce. So the 5-point is around 57.25. So 57.50 is 57.25. It might even continue down to the 55 area. Oh, no, hold on. Yeah, okay. All right, here we go. We should get it. Sorry about that. I couldn't sync the talking and the muting at the same time, so whatever you heard, just pretend you didn't hear anything. Here we go. I actually sold it. I sold a close of 28, and I want to take profit here where I marked. That's a quick scalp right there, while someone was distracting me otherly about, should I get turkey? Should I get ham? Should I get salami? What do you want? Just go away. I am trading. Never let anyone distract you. So here we go. I took profit right there. That was a very quick scalp. Now, can it continue? That's a 5-point scalp also, but it should bounce first. So you could see that lower wick and the body is bouncing up a little bit. That's because they're taking profit here. Can it continue? It could continue down here because that's a good momentum now. That doesn't mean it's selling. That means these bulls are intensely taking profit. And when you get the 3 bar, okay, you could end up getting another leg into the EMA because we're way up, okay, from the EMA, more than 20 bars. So 3 bars creates a bearish momentum. You would expect sideways and another leg down, but you want to see this bar close bearish. Now on the larger time frame, we overshot the 66% on the 1 hour. They're on the Globex chart. They're trying to get a 2-bar reversal. That means they need to close this 15-minute bar all the way down here. Then it would continue to sell. But if this bar suddenly in 7 minutes and 30 seconds closes up here, no one will sell, and this could continue to go up. But you can see why I took profit. That was a 5-point profit taking if the bulls started to take profit underneath the bar 27. You can measure it that way. That's how L measures it. I look at the pivot levels to get a little bit more, or some kind of a confluence, and that's it. So I took profit almost there as well. Now, can they continue to sell? They're going to have to close this body or a next bear body right here, either 1150 or 1175. If I see a bear body closing, then I might either sell again, or if I have a runner, because I'm thinking the price is going to come down here, and it may not. Bulls still can keep the bull gap open to go back up here. So if I want to scalp more, and if I'm not in the market, I'm flat, okay, I want to scalp more, I would look for a bear body closing. Let me get that out. Closing there. And then that's your next target, either that or 15, one or the other. 15 would be the extension. Or you can pull it down to 10 point. So where's that 10 point? So somewhere there. So I would go for 14. That adds up just about right, okay? Right around there. But I don't see that bear body. And I said take profit here, which was the 10 point. That's 11, 10. Now you know why I scalped there. It was also the 5 point. Again, you're in a bullish trend. Anytime you're trying to sell, okay, bulls are going to challenge you because you are trying, let me get rid of this. You're trying to break a trend line, right? So here, first break, it's probably going to want to go back up. Now, we have up on this, down on this, up on this, down on this, up on this. Or if you start to count here, because we have a breakout, then that's one, that's pullback, that's two, pullback, that's the third pullback. You still have a wedge. Or you could say this is a complex leg, first pullback, second pullback, we just need another leg up. And that leg up could get us to that 4-2-1 risk reward. So bulls are still, I think, in charge, but these bears, they still want their second leg down. Now, will that second leg come all the way down to the EMA, or is it going to fizzle right around here and become a trap, just like here with the bar 28, bar 19 or bar 20? So market has been buying high ones and ended up making a high 2 here. So here's your high 1, bar 29. Like I said, we did not test up here, so bulls may want to push this further up a little bit before actually selling. Now, bears were able to get to the 10 point, so count begins, okay? So what did the bulls do? Well, let's count. Did they make a 6 point close? Yes, they did. I mean, right on the nose, they did. It's not one tick above, but that's a good trend. That's a mini trend. Now, what they need is actually a bull close above it. It just closed at the 6, so that's good. But are they going to be able to get to the 10? I need to see a bar closing above, going above this level. Now, what's happening here? Well, it's a bullish move. So now the bulls see that there's a bar that actually closed, went up like 6 points. They're going to park their buy stop orders one tick above. And they're waiting to buy the high 1. I don't like buying high ones because if you do, you know it's going to come down a little bit, right? So like it did. So you could, you didn't get filled here, but even this one just came down. So why don't you just wait for high 2? Also, the same situation, anybody who bought here is one tick above, okay, trapped. So they're buying, you know, maybe 5 points below, 10 points below to break even. This bar, with bar 29, they actually broke even. Now, if there aren't any bulls in the market, we might not go so fast up high because we're still trying to make that second leg. So we're also in a 3-bar limit order. They're selling a strong bull bar, okay, and scalping. But this doesn't mean they're going to sell all the way down here. We don't know. Buy stop bulls are patiently waiting 1 tick above. And they actually want the market to go back up to their original entry so they can make money with that original contract. So got the point. So that's a 10 point right there, which is 66.25 area. You can wait for a bull bar closing above that 6 point area I marked. Now the bears who might have sold underneath 28, they're also trapped. So what are they doing? They're going to have to sell it somewhere. So that somewhere is above this bar or the close, and they did. So if you were a bear and you sold here and you didn't actually take profit, if you sell here, did you break even? Yes. You broke even right there. So now if this bar, bear bar, cannot close below that 50%, that means we're not going to come down here and the price could go up one more time. But if they do close it below the 50%, there's a chance that the bears want the market to come down to their original entry and make money with that. But if the original entry is not making money and all they're getting is a break even, and this bar closes weak bear body somewhere up here, bulls are going to buy. They're going to want to go back to their original entry price and take profit, and most likely to break out again into the sell zone. You can tell by just reading who's winning this fight. Look what happened right there. Bears actually broke even with bar 30, but they could not close a bear body below the 50%. Especially now this bar, and it closed kind of in the middle, but it's not really the middle. But I guess you could say, although I don't know. So if I actually measure just to see, it didn't close in the middle, 50%. So if you're selling this, I would say be careful. Because I think it's going to go higher. Outside, inside, 29.30. Bulls are trying to take out the inside bar's high, happens to be on the same level with the outside bar, and they're trying to get a breakout bull bar to continue to go higher to their original price, 1 tick above 26, and make money with that contract like they plan to do when they first enter. But we need a bull body printing above where I marked 6 point. We don't have it yet. I don't want to sell. The market is bullish. It's still trying to keep the gap open. And this gap still continued to stay open all the way to bar 40, maybe even 50. I'm trying to find you guys an example. So I'm looking at a different chart now. I mean, is different monitor. Need to see this. Hang on. Okay, so here's an example. This right here is not the encyclopedia. This is actually the chart patterns, daily setups. Okay, so it's, and you have access to it as a course member or encyclopedia. It's in there. Anyway, so look right here. These are swing setups. The green box with the blue borders are swing entries. So they did come down. This was right here, this area. But they still kept the gap to EMA open. up until here. So now I don't know how many bars in here, but that's 3, 4, 5, 6, 7, 8, 9, 10. I wish that we could actually put bar numbers, not all of them, but maybe every hour so we don't have to count. Hint, hint, Richard. Yep, so that's at bar 20, okay? And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 30, 31, 32. Yep, so somewhere around bar 40 midday, we get another bull run. But we now are still gapping, so I'm trying to find something a lot more like this, for example. Turn this upside down, similar thing. So by the time we get here, we might buy again, unless we see a surprisingly big bear bars gapping below the EMA. We don't have that. Trying to find, we have a bunch of days like this actually. Morning gap, I'm sorry, morning trading range, breakout. Even if we come down and go sideways, you know, we have a wedge, bull flag, wedge, 1, 2, 3. We have 1, 2, 3, 4, 5, 6, 7, but the bear bars, first close, second close, third close, and a fourth and a fifth, say fourth close, like 4 bars close, that's all they got, and then bullish. Another one, like climactic, goes sideways but still higher, but now it gets 1, 2, 3 push, or 1, 2, 3 push and a lower high, and then it sells strong, comes down to the 50%. So in order for me to sell this, I need this bear surprise bar. Bear surprise bar. Those of you who don't have access to it, you might see a similar chart on the blog, but blog doesn't have all of these explanations. So basically all these charts are training materials, but you need to have access to it. So contact Richard if you want to get access. You have to subscribe. These are updated daily. I'm trying to find that for you. Oh, here. See, all the way to here, we have not touched. That's bar, I believe that's bar 50. Okay? So we might still get that. Gap, maintain, turn this upside down, gap, maintain, and finally, and then we're still, even though we tested the second time, we bounce. So we could get that day. Trading range, but this one already touched, so that's not us. All right, so here we go. Trading range, bullish, comes down, maintains the gap. So I believe this is bar 60, not 50. You see, again, bullish, very bullish. So I think today is one of those days. Very bullish. So I think today is one of those days. Very bullish day. So this means I'm looking to buy that bounce at the EMA. When we get to the EMA, I'm going to buy. If I see a good strong bull bar closing above EMA and the bears fail to sell. Gap, although closer, but still there's gap. Finally test, that's bar 60, I think. Yep. Somewhere around 60 and it goes up. It's bar 60, I think. Yep. Somewhere around 60 and it goes up. I love this tool. This is my favorite. Anyway, so you got the point. Oh, that's it. Yes, multiple risk reward ninja. Thank you for posting this. EVN MCK. That's the one I'm using. And thank you, Brad. That's it. You can get a sampler and you can sample it before signing up also. That's what I did. I was hooked immediately. So everything is on their chart, basically telling you how to swing, entry, how to scalp. You just have to spend some time and, you know, look at the charts. Okay, Brad is coming in. I have to go, and he's going to be doing the afternoon, which I'm actually excited about. So I'm going to be sitting here. I'm just going to go walk around the house just to, you know, open up my legs a little bit because I've been sitting here since 8 o'clock. And then, so don't just start, Brad, quickly, okay? I'm going to sit here and I'm going to listen to him. All right. I'm going to end my session. You guys have a great day. I will see you guys. Let me check the schedule. We just posted. Okay, tomorrow I'm scheduled. And then Thursday, and then back on with Brad again on Friday. All right, you guys have a great day.
Good. Thanks, Rose, for the webinar this morning.
You're welcome.
So overall with the day, it's really impressive how well the Bulls have done over the past few days. And let me pull up the daily chart for just a minute. Let me just adjust a few things. So the Bears got a really strong breakout on November the 2nd. Here was November the 1st, here was November the 2nd, and it's a surprise bar. And for some reason these lines didn't save, but I want to redraw them real quick. The Bears tried to form a double top with September the 21st on November the 1st, so 11-1, which is this bear bar right here. They broke strongly to the downside, and right now the Bears were trying to test this low right here, which is the October 26th low. And the interesting thing is I do think the Bears will get a second leg down based on this breakout. This is enough of a surprise that we probably will have to have a second leg down. But this is also a lot of damage for the Bears. And one thing you have to think about is if you look right where we are, I have it marked on the 5-minute. We are testing, we're above it now, the entry price for the Bears. So if Bears sold below this bar, this magenta line here is the entry price, which is this price right here. Whoops. And I think it'll be really interesting to watch, and I have that price on the 5-minute because I think it's going to be an important price going into the close for the rest of the day. You know, the one thing we have on the 5-minute is we have a trend from the open. And if you look at this chart, I have everything removed because I really want to point out two things. Here's a measured move from, well, actually, let me turn on the bar counter. For some reason, the bar counter always turns off whenever I shut this computer down. So here's the bar counter. And I've got the Discord pulled up if anyone has a question. I'll look at it periodically. But the interesting thing is we made an exact measured move from the low of the day to this measuring gap, try and space this out a little bit. But the low of the day to the high of bar 11 and the low of bar 20 is basically a measuring gap that takes you right to the high of the day. The reason I think this is important is you look at this slide. It's one of my favorite slides for trend from the open days. most trend from the opens do not remain a small pullback trend for the rest of the day. Most of the time, they do something like this. Low probability it does this. So the most common outcome on a trend from the open is a trading range. So we have a rally that forms a trading range. Where would the low of the range be? It could be bar 20, it could be in here. I don't think we're going to the low of the day, but if we look back on days, this is probably going to go sideways for some time. And there's an obvious magnet here, the November 1st signal bar low. We also have, which I want to add. No, we don't. I'm wrong about that. So I think we're going to have to go sideways and get to the moving average, and probably, maybe we get down to this level right here. See, just like that, I don't understand it. The bar counter just went away. Hang on. I like TradeStation, but it definitely has its frustrations. Martin L., what do you think of the odds? Oh, whoops, there we go. What do you think of the odds of the measure move based on the opening bar 18 range breakout? Well, I think it's possible, and that's basically saying what's the odds of getting this and measure move from here to here. I don't think we'll get it. I think we're going to come down to here before we get up to there. And part of that reason is what I talked about with this slide here. I think we're going to do this. The other portion is the daily chart. The bulls have done a really good job, but the problem is we're in a trading range, and trading ranges disappoint traders. And just think about it. If you're a bull, what would you do here? Let's pretend, let's go back to here. So you buy this close, you put your stop down here, you scale in lower, you get a second leg up, and you're saying, okay, we're going to 4,000. So you buy the close, maybe you're long, and then you get this bear bar. And you're thinking, the channel's tight, there's a gap here, I'll just buy this low and scale in lower. And you scale in lower, and if you look what happens, you get trapped here. So you buy this low, scale in lower. Give me just 1 second. So where I'm getting at is, first let's check the price action real quick, because I think this is important, not only concept for the daily chart, but just an important concept overall. But on the daily chart, you always have to put yourself in the shoes of the trap trader. It always kind of makes me laugh, but if you go to I don't remember if it's the original video course of Al's or the book, but he makes the analogy, he talks about how, in poker, if you don't know who the mark is or the trap trader, it's you. And that's really important in obviously trading. If you don't know what trader is trapped, or if the bulls are trapped or the bears are trapped, then that's going to be a problem, because you're going to become one of those trap traders. So the bulls that bought here, they likely would scale in lower. Just imagine you buy this low, you see this bar, and you're thinking, darn, I really should have gotten out below this bar. Okay, I'll set a limit order up here, and I'll get out when it comes back and retest my price. Well, what are you going to do up here? It's now back at your price. Are you going to say, gee, I'm really happy as a bull that this pullback sold off all the way down here? Or are you saying, I don't know, the market's giving me a chance to get out at my original entry. Maybe I should just get out and the market's going to go sideways. That's exactly what's going on here. Some bulls buy, scale lower, get out. Some bears, think about it this way. If I'm a bear and I know the bulls can probably avoid a loss, do I really want to sell this close? Maybe. But I also might just be saying, maybe I'll just sell when the market comes back up here. I think there's going to be a second leg down. I don't think the market's going to race down, though. That's disappointing. So maybe I get out of shorts, or I just stay flat and I look to sell up here. There's a reason break-even stops do not work, and it's exactly the reason I'm talking about. it's the same thing over here. Maybe bulls buy, market goes their way, they set their stop break even, they get stopped out. The bull that waited could buy. That's why I think this price level will be really interesting to see today. I think the bulls will become disappointed. 15-minute chart, very climactic, strong breakout, probably going more sideways in here. Again, I don't think we're going straight down. I think we're going sideways. But when you get this many buy the close bars, it becomes climactic. And traders will start taking profits and buying lower. 5-minute chart, minute chart. I'll just do it like this. It's good enough. And again, I don't know why. That explains it. Just 1 second here. That is a 60-minute chart, 15-minute chart. Well, actually, this is the 60-minute chart. Spike, channel, breakout. Is this a start of the new market cycle and the market's going to rally and go higher? It might. We do have gaps. There's an open gap here, so you do have to wonder, is this going to be a measuring gap that goes to here? We're already right here, so that's one target. Maybe this is the target, or maybe this is the target. But right now, strong enough surprise, probably at least a second leg up on the 60-minute. For the 5-minute, I still believe we're going to end up in a trading range. So you have a wedge bottom, 29, 32, 34. What do you do here? Well, there's a few problems I have with buying above 35. For the bears that sold below 26, breakout, it retested the entry price here and here, sold off more. I think it's reasonable for bears to exit above 35. My problem with buying above 35 is we're still not at the moving average, and I think we have to get down here. So I don't want to buy here if I think we're going to go a little bit lower. I'd rather buy lower. We also have this kind of, you can call it a thin area. It's a gap. Maybe the 28 close, 34, 35 close. So I am suspicious of right here. Now the reality is the trader can probably buy and just scale lower and they'll probably make money. But I do think we have to get down to the November 1st signal bar low. And I think it's reasonable. We might close below it. Now, even if we get down here, I still think we'll probably bounce. So trading range, bulls will buy, scaling lower, get out when it goes up. Bears, they'll sell up here, scaling higher, betting on sideways. On the open, obviously I'll talk more about this at the end of the day, but whenever you get 3 consecutive bull bars and a 4-bar micro channel, especially with the signal bar being just above the moving average, it's not an ideal sell. So some traders sold it, and you can see they were so disappointed here that a lot of traders, when this bar closed and didn't sell off, they got out on the open of bar 8 and the market raced up. A lot of traders would exit above this bar, and when bar 9 was not a second entry short, they all gave up on 10. And the market became buy the close all the way up. So right now, what I would not do is buy above 35 and put a stop below 34. If I was going to take that trade, I would buy above it and use a wide stop and scale in lower. Why? I think this is a trading range. The euro dollar it's fun to talk about right now. So if you've been reading the blog, the one thing I've been saying, and Alice said it for a while, is the daily chart has been in a bear channel since early, let's just say mid-2021, May or June of 2021. Maybe it started here. Channels evolve into trading ranges. Therefore, at a minimum, I think we're going to have to rally for at least a couple months. You know, if this right here is a bear channel, the only way we can form a trading range is for the market to rally. Is this the start of? So ask yourself, if this is the channel, we're probably at least going to the midpoint of the channel, and maybe this is the start of the channel, which means that that's the start of the channel. The midpoint is right here. So it, you know, I really think we're going 400, 400-ish points, 400 pips above where we are. We have a measured move target here. So we have a double bottom here and here. We're trying to break above the double bottom, which would take you up here. So right now, the bulls are getting decent buying pressure. Good buying pressure here, disappointment, buying pressure here, disappointment, strong bull bars. So what do you do if you sold below this bar, you sold here, or even you sold here? You know, what do the bears do that sold the November 3rd bear bar? It's not a great sell. It's 3 pushes down. You can argue 2, 1 leg pull back above this high, 2nd leg, or you can say October 22nd was the first. This is a pause. The 2nd leg was November the 1st, and then the pullback on November the 2nd and outside down was the start of the 3rd. This is strong enough that bears that sold are trapped, and they will use any bounce or pullback to probably avoid a loss. So I think it's very reasonable we could break out to the upside pretty quick here. It'll be interesting to see how will the euro dollar close today. Can the market close above the October 26th and 27th high? Can this bar close on its? Can it close above the highs? Can it close? Excuse me. Let me back up. Can it close above its midpoint? Can it close above these highs? It'll be really interesting to see. Last thing I'll talk about with Forex is the dollar yen has obviously been doing extremely well. Well, the yen hasn't, but the dollar has. And you can see very climactic, buy climax, another buy climax, another buy climax, another buy climax. And we're probably, this is parabolic, which means we're probably going sideways. So on the daily chart, I think, sideways in here, we could easily come down to somewhere down here. And on the daily chart, the Canadian is trying to break below the bottom of the trading range. So anyways, low one short. Well, let me back up. 35, signal bar 36, a weak entry bar for the bulls. And 37 went below 36 and found buyers. So it's a reasonable buy. It was a reasonable buy below 36, and a lot of bulls would buy it, use a wide stop, betting that the market was going to go more sideways here. So do you buy above 36 as it goes outside up on 37? Some traders will, but again, you have to ask: do you really want to buy above the moving average and it's been almost 20 bars? Yes, that is a sign of strength, but ever since really over here, bar 50, we have had one close below the moving average. So that's 50 bars. So 50 to 80, that's 30 bars. 1 to 36, that is 36 bars. So we've had about, call it 35, call it 36. We've had about 65 bars, give or take a few, and only one close below the moving average. I know that doesn't take into account the Globex market, but it's still, that will affect the day session for the days, some people call it RTH, others just call it the .D. That makes me further think that the market is going to go down here somewhere and get below the moving average. If the bulls were really bullish right here, we would not, I talked about going outside up and buying above it 2 minutes ago, and 59.75, 60 even. We just went above. We only went one tick above for 2 minutes, and just now as I was talking, the market went maybe a point above, 2 points above. So you have to ask yourself, yes, the market's going up, but it's not racing up. So we've got about 40 seconds left in the bar. Let's see what the bulls can do here. So if I bought above this bar, I did not, would be 38.60. I have 3 ticks profit right now, 2 ticks profit. 36.50, so 2 ticks profit. How am I feeling as a bull? Thinking, now I'm break even, I'm underwater. How am I thinking as a bull if I'm saying, oh my gosh, we're going to go outside up on 37, I've got to buy? Well, the reality is I don't have to buy. I want to buy lower. I don't want to buy above the moving average, therefore, and there you go. So not so ideal. And also, I want to buy below this purple line, the 11.1 signal bar low. I'll just keep it right there. So it's important to, and my other problem is we've rallied so much on the open. I think the near future, the next hour and a half is going to be limited. So I think the reality is we're going to enter a trading range market for a good bit of time. So if you do have questions, now might be a good time to ask them. Because I do not see a lot of movement happening in the near distant future. And for those of you that, it's getting close to lunchtime, so now might be a good time to take a break from trading. So, second entry buy, 38, touched the moving average. Is it a reasonable buy above 38? Well, you can take it for a swing, but my problem is this is a lot of trading range price action, a lot of overlap here, small body compared to the tail. Now, you can see it does look like traders are buying it. So, it's not all that unreasonable, but I do suspect these bulls are more or less going to scalp out. The 26 close, some traders bought 26, disappointed on 27. So this was their entry price. If they bought that close, they will probably scalp out here. This really wasn't an ideal buy. If you look at 20, 21, and 22, buy climax 21, pause 22, buy climax 23, pause 24, buy climax 25 and 26. So 3 pushes, 1, 2, 3. Probably sideways up here. Oliver asked, Brad, yesterday I sold the 27 close and more below 30. 27 close, so Oliver is saying that they sold here, okay? And it's an okay sell betting on a second leg. You're selling at the bottom of a trading range, and the price has not been below the moving average for several bars. And set my stop above 25 here. That's good. I walked away and came back around bar 43 because Walmart strategy and was disappointed. Yeah, I wouldn't do that. Could you explain why I didn't get follow through? Should I have exited earlier if I was watching my position? Yeah, so the Walmart strategy is it's a multiple, Ali Afshari would say it's a multiple R strategy if you were at the Orlando event. You heard him talk about that. Or Al would say it's a low probability, good risk reward trade. So it's a swing trade. The Walmart trade is buying above bar 3, stop below bar 3, or buying above bar 4, stop below bar 4, and you just go for a walk and you come back in an hour and price is here. It gives you the potential of making more than 1 times your risk. The problem with buying here on, I'll fix that in a minute. The problem with buying here, or selling here on 27 is right here. That's 1 times your risk. You have to ask yourself, I'm going to sell this close here. What's the probability price goes all the way down to here before it goes to here? Well, the challenge with that is my risk reward is terrible. It's 1 to 1. If it's terrible, that means that probability is the only thing that is going to keep this trade alive and make it worthwhile. When you have high probability, you have to manage the trade. You have to be willing to, you have to know when to get out. If I'm selling this close, there's only one reason I'm selling this close, and I don't think it's all that unreasonable. I'm selling the close because I think there will be a second leg, but the second leg might be 1 or 2 bars. It may just go to the 14 low and fail. 28, that was the first sign of disappointment. If you sold the 27 close, you have to ask yourself, I sold the 27 close, price went, more traders bought 27 than sold it. That's a problem. And there we go. So we went lower on 30 and 31. Most traders would get out here or here. So look what happened. I know this is probably more detailed than you wanted, but look what happened right here on 27. Traders sold this close. They wanted a second leg. They didn't get the second leg. Now they're even more disappointed, 32, 33. They were trying to get out back at their original entry here. So some traders, and I say all that because I've made the mistake of selling this and not getting out on the second leg and being trapped here. You sell this close, you want the market to go far, and you hold, and then you think, darn, okay, maybe on 32 it's not going to go much lower, but if I scale in higher, maybe I can make a small profit on my second, break even on my first, and it didn't even allow you out. Then you get this. You're still trapped and the market's going higher. Now you're trying to get out break even. And what do you notice right here? Well, that's your break even price. And the market didn't let you out. So when you're taking the Walmart trade, you have to be willing. You have to do it on a low. You cannot do it on a bad risk reward trade. So good bar, 39. Testing the 26 close, not quite there. Some of the bears, they want 33 and 39 to be a double top and a measure move down. That's why some traders are selling. Other traders are taking profits up here. I said this was a trading range, and part of 40 is confirming to me that this is a trading range. Mad Mo, M-A-D-M-O, asked, give me 1 second. So Mad Mo asked, hey, can you explain something that happened earlier at bar 3? Rose said there would likely be a 20-point project from the bottom of bar 3 up. I think you mean projection from the bottom of bar 3 up 30. Okay. And indeed, they were selling at that 20-point target. Why was 20 points the magic number there? I didn't follow exactly why that was chosen. The complete way to look at it was 15 points from the top of bar 3. Well, so let's just look at it like this. Below this bar is 810. Let's just call it 8 even, 38 even. Behind this bar is, if you choose this bar, it's 18 points. If you choose this bar, basically 20 points. If I had to guess, what Rose is talking about is right here. Measure move from this low, bar 3, to the high of 9 takes you to pretty much up here. And if you look, there was selling right before the market got there. One could also argue, let's say I bought above 17. So my entry would be 17.5. 20 points higher would be 1 second. Basically be 37.5, and you can see market went a little bit above and sold off. Give me just 1 second. So on 40, it's exactly what I was talking about. You have a double top, and the bears want a lower high major trend reversal. Al used to talk, I believe Al still talks about this, but he would mention it a lot more for entertainment value. And what he would say is a lot of traders, especially when, this was back when 10 and 15 point days were pretty common, and a scalp was 1 or 2 points, a swing trade was 4 points. Obviously now the range is much bigger, but what he would say is that often what traders would do is when the market would get back to a reasonable price, like here, traders would sell maybe 2 ticks below this high and risk 3 ticks. So risk 1 tick above the high. Maybe now it's risk 1 or 2 ticks above the high. But in any case, they would risk 3 ticks betting on a lower high major trend reversal and a sell-off. So what traders will do here, some traders sold this high, well, not this high, but they would sell this high, bar 33, 1 or 2 ticks below, maybe 3, and put their stop 1 tick above 33, betting on a major trend reversal. Obviously, that is a low probability trade. Other traders would wait for 40, betting on a double top. So 40 is a credible swing short, and it's also 3 pushes up, 36, 37 here. So 1, 2, 3. You can just say 2 legs up, doesn't really matter. But this is why I was not so bullish about 38, even though 38 was racing up. It's a profit-taking zone, and we're in a trading range. I still think we've got to go down here. And I don't know if I mentioned it, but Rose even also said that I think I may have had to answer a phone call real quick, but to give me just 2 seconds here. Yeah, Madmo, one thing, actually, MUMIX, I believe, answered it, but it's also probably 20 points above the bar 3 high, which is basically what Rose said earlier. And MUMIX seems to be right about that, out 5 and 10 point increments. So a lot of traders, whether it's Rose or others, everybody has defaults, and 5 points seems to be a fairly reasonable default these days. But a lot of traders, they'll take their position off in pieces. So 5 points, 10 points, 20 points, sometimes 5, 10, 15, 20. Other traders, if the scalper's really aggressive and they're really good at reading the chart, they'll often just take maybe all off at 5 and just keep re-entering the trade multiple times. And, by the way, just an interesting thing about computers and algorithms and markets, whatever you want to call it, but to Rose's point, she mentioned buying above here, and this was, around here was a 20 point target. It also corresponds with the low of here in this measured move. Let me back up, actually, I may have, yeah. Give me just 2 seconds. I want to adjust a few things. So actually, I take that back. So actually, Madmo, I misread your question earlier, but I was thinking the measured move from 3 to 5 projecting up, which takes you up to here. But a 20 point target, after rereading your question now, it actually makes a lot of sense. So that is my bad. But yeah, buying above here at bar 3, they're likely to be a 20-point target. Yeah, it's just 20-point distance from a swing trade. You know, same thing probably here. If this is 52.25, then maybe, excuse me, it's 47.25, so maybe 67.25. And you can see right here. So to Madmo, if you're listening, same thing at bar 20. You buy above here, that is exactly 20 points. But the interesting thing about computers and algorithms is I measured this target. I wasn't even looking at that. My projection was based on the low of the day and this measuring gap, which takes you exactly to that same target. So 42, confusion, probably forming a triangle. There's always multiple ways you want to try and find support and resistance levels that have multiple reasons for that level. That gives, you know, the more people that notice it, the more computers that notice it, the more reliable it'll become. So tight trading range, what would I do here? I wouldn't do anything. We've been above the moving average for all day, except for the open. And I think we're in this phase somewhere. So I think we're going sideways for some time. Ray game, was the buy above bar 3 a reasonable buy? Sure. I did not buy it because bar 1 and 2, bear bars, and bar 1 was a big bear bar. There could have been 2 legs down, plus you don't want to be aggressive on the first 6 to 12 bars. Well, I like the fact that you don't want to be aggressive on the first 6 to 12 bars. You know, I think one step to being consistent, well, I know it is because anybody that's traded long enough has made this mistake. You know, the first 6 to 12 bar, you know, I heard Al always talk about that, and I didn't make that up. I write it in the blog, more just out of habit now. But the one thing I would always hear Al say in the webinar is, you know, you have on bar 6, there's still, you know, 75 bars left in the day. You know, you still have the entire day. Even after the first hour, you still have an entire day's worth of trading left. You know, don't do something stupid on the open and have to dig out of a loss. And what I started noticing was, for me, typically my bad days happen. The tone of the day for me was always set on the open. If I was going to have a great day, I'd do really well in the open. If I was going to have a bad day, I would do really bad in like the first 3 or 4 bars. And the reason for that was because I was naturally aggressive, you know, fading bars, scaling in. And what I realized pretty quick for myself even was, if I would just wait for, you know, those 6 bars, typically whatever I would make would not yield that much, and the risk exposure would be big. So, you know, for example, selling above here, getting trapped, or, you know, we had a pretty good example the other day of kind of here. So if you're selling here, it's easy to get trapped. But to your comment specifically, what made bar 3 a reasonable buy? There's a few things. One is, let me do it like this. If you're buying above bar 2, or if you're selling below bar 1 and 2, there's one challenging problem. It's an okay swing sell, but bar 2 failed to close below bar 1. Bar 1 did not close on its low, and it's also in the middle of this tight trading range. So the risk is big, and you're just at the moving average. You really want to sell. I'll do it like that. You really want to sell here. Now, whatever. I don't want to fix the scaling on the screen, but if you're selling the close of 2, this is 1 times your risk, here and here. 50% chance on the open that the first direction's wrong and the first direction completely reverses. So the odds actually, you know, if you think about it, you know, Ray game, I challenge you, look at the chart and try and find the second leg of 1 and 2. You know, you can argue that bar 4 is that second leg. So if you think about it, if I sold the close of 2 and I see bar 3 and I'm thinking, you know, dang, that was a really bad mistake, I'm going to get out break even. It allowed me to get out break even. But bar 3 is a reasonable buy. And bar 3, I would call that a Walmart trade, where you buy above it, stop below, and you come back in an hour. Okay, so what's going on right here? So we have, let me try to do this. Really kind of getting tired of moving the chart around so much. Here we go. There we go. So we have 42 and 43. It's 3 pushes up. So no surprise. Traders that sold below 33 got stopped out here. Now we have a failed breakout below a double top here and here, and a wedge. Wedge, 37, 39, 43. Now the bears will say, this is the wedge top here, and maybe 27. But you have to, notice how 42, the close of 42 is, well, first off, my point is notice how traders sold the close of 43. But the close of 43 is 63.75. The high is 63.75. Why did 43 not close above the high of 39 or 40? And the reason is the bulls are not strong enough. So if I'm buying in a trading range, I do not want the market to immediately sell off on the close of the bar. I want the market to go straight up. So let's look right here. Maybe we can do this on the 1 minute chart, it'd be easier. Look what happens right here. So this is the close of the 5 minute chart on the prior bar. And what I'm interested in seeing is, I want to see how disappointed these traders are. Well, the traders that bought the close of the prior 5 minute chart, so if they bought the close of this bar, what are they going to do right here? Are they going to, some will get out, others will hold. But, you have to ask yourself, that is a sign of hesitation by the bulls. The bulls still see, they want to break out of a wedge. 1, 2, 3. This is not, even though there's not a signal bar here, you could still call it a breakout of a wedge. But back to the 1 minute real quick. I wouldn't be surprised at all. I don't want to go into that. I wouldn't be surprised if the bulls failed in this area. They're trying to break, they're testing the 26 close, and the market's deciding, sorry about that, dropped a pin. The market's deciding if the market needs to go higher. But with all the trading range price action, I am suspicious that the market's going to go a lot higher here. We still have not touched the moving average. The low is 55.50, 55.19. Maybe we didn't even technically touch it here. See that? No touch. So I think there's probably sellers up here more than buyers. Now, we probably will go one tick above the high of the day. But let's see what happens at the high of bar 27. Will there be more buyers or sellers above 27? So right in here, if you look at the 60 minute chart, you will see that we're breaking above a high one buy. It's a doji. So it'll be interesting to see, will there be more sellers above this bar than buyers? Some traders will buy above it, but I suspect there's going to be more scalpers. So if we go, even if we go above the 27 high, I think there will be sellers up here. Doji bar, it's by the close market. It's a bad high one, and the momentum is good, but the signal bar is bad. Increases the chances that there might be more sellers above here than buyers. This could still act as a wedge. Wedge bottom, 1, 2, 3, 42, 43, 44. 3 consecutive bull bars. You can call it a 5-bar bull micro channel. Lowers the probability to sell, but you're in a trading range, and that is a good enough reason to exit longs in this area. low probability swing sell, but it is still a swing short. With this many, probably better to wait for a second entry after a 5-bar bull micro channel, but it's an okay reason to get out of longs. One thing you want to pay attention to on stop entries is pay attention to if scalpers take profits. So we're going to take the logic of what, let's say, Rose talks about with 5 points. 63.75, 63.5 would be your entry, which means 58.5 should be your target, since 58.5 is your, and maybe, make sure that's right. Yeah, that's right. This range isn't actually that big. So, I don't know, with the bar size 3 points, some traders, maybe they scalp out with 3 or 4 points profit. But either way, whether it's 5 point scalp, 4 point scalp, the point is pay attention to the entry bar. And if the bar sells off and starts to pull back drastically, that means more traders are scalping out than swing trading. If the market starts to keeps going down but doesn't really pull back that much, that means more traders are selling every pullback. For a really good swing trade, you don't want traders to scalp out. There will always be traders that scalp out, but you want more traders to come in selling. So what you want is everybody to look at this and say, gee, this is a really good looking bar. I need to get in on any pullback I can get. So everybody starts trying to sell 1 tick above the bar, 1 tick above the current price, 2 ticks above the current price, and they just do not let the market, they don't let traders in. So look at this 1 minute chart. Again, I'm only showing the 1 minute chart for illustration. You can see this on the 5 minute, but you can see right here, the market's not really pulling back any. And that is really good to see on, let's look at a 30-second chart. That's what you want to see. This might be a bad idea. I'm not going to do that actually. I don't want my computer to crash or the webinar to go crazy or something. But this is good for the bears. The market's not really pulling back. So let's look at 5. I believe I said a 58.5 is 5 points. So 63.75, you get in at 63.5, which means 58.5 is your take profit for a 5 point scalp. And you need a price to go 1 tick lower. But this is a good reason why traders, and I don't know if I mentioned it, but it's a major trend reversal. So traders are selling here. And most traders should be out of the longs at this point. This is why I said I wasn't sure if it was a good enough sell below. It's a swing sell, but it was definitely a good enough take profits below this bar kind of sell. So why did this fail if it's a 5-bar micro channel? Well, it's the third push up. See this wedge? 1, 2, 3, testing the high of 27. I also told you this was not probably, the market had to get below the moving average. And I think the market has to get below here. So what happened to the 60-minute chart? I talked about this earlier. I won by, but, good momentum, bad signal bar, probably more sellers above. Probably at a minimum going down to here. On the daily chart, take a look. Here is that November the 1st signal bar, and I think we're going below it. I don't want to do that. There we go. So let's do that. So it's really easy. Let's see here. Rose made a good comment just now that's worth reading in the chat. So yeah, I completely agree with what Rose is saying about 5 points, 10 points, 15 points. And, the way I view that, and I'm sure she probably views it the same way, is the reason why you want to pay attention to those 5 points, 10 points, 15 points is what the whole point behind it is you want to pay attention to if there's a logical area where traders are taking profits, and obviously the market's selling off, it's sell to close, but At this point, it's better to wait for the bar to close. The reason why you want to pay attention to 5 points, 10 points, 15 points, 20 points is you want to pay attention to what traders are doing. I said here that 58.50 was a 5-point scalp. Clearly, there were far more traders selling aggressively than bears buying back shorts or bulls buying. So if that's the case, the market's going lower. What does this tell me? This tells me that the first left is probably going to fail. I mean, if I go to a 1-minute chart, whoops, me randomly typing in the Discord because I have one keyboard connected to 2 computers. I don't want 2 keyboards on my desk, and they're plugged up to monitors, so I don't have a way to type on the laptop. But this is really good selling. Look how big these pullbacks are. And again, you don't need to see this on, I can see this on a 5-minute chart. I can look at this and tell as I'm watching the bar. But what this tells me is everybody who bought, there's trap traders. So the first left is going to fail. So you sell the close. It's a forced count type of trade. Sell the close, stop up here. Probably better to be if you can sell more higher. So this kind of brings up a good Walmart discussion. People are asking in the chat about, would this be a Walmart trade where you sell this close, put your stop up here, and come back in an hour? I wouldn't see it like that. You want Walmart trades. This is a Walmart trade. You sell below the bar, put your stop 1 tick above, and you go on a walk and you come back 20 minutes later and you say, wow, I made 30 points. That's a Walmart trade. Whenever you are trading in the high probability area, it's sell the close, stop up here, high probability the second leg. Whenever you're trading that, you have to know how to manage the trade. You have to be able to get out. You have to know when to get out. So this is really impressive, and this makes me think that we may end up going to the open today. But again, if you read the blog post today or listened to me earlier, I want to mark this before I forget. I am suspicious of the signal bar low from November the 1st. And if I had made it clear why I'm suspicious, I'll talk about it in just a second. My problem with the context on the daily chart is this is strong enough for a second leg down. My other thought was we're in a trading range and the pullback could be really deep. So if I sell this close and put a stop up here, the market could pull back pretty far against me. So I really need to be able to sell more higher. And when you're scaling in or you're trying to maximize, getting good fills or getting in at a good price, you have to use price action in order to do that. You have to read the price action, read the context. More often than not, the market will let you re-enter at the signal bar low. So sell below this bar, price goes your way pretty quick. Well, think about the logic. If you sold anywhere in here, put your stop at break even, you just got stopped out. Well, how would you feel if the market ends up closing down here? I'm not saying it's going to today, but how would you feel if the market's down here in a few days? You're going to be really disappointed thinking, gee, I should not have used that break-even stop. And, there's plenty. You can listen to Ali Afshari. He talks a lot about this. In fact, he will actually enter, hypothetically, he'll enter on some trades where those break-even stops would be. And he's not the only one. There's plenty of computers, there's plenty of traders that do that. It's no different than you get a breakout point, 24, you get a breakout, follow through, you set a limit order to buy the gap, the 24 high. Same concept. So it's sell to close, stop up here, probably going lower, but you need a wide stop, and better if you can trade small and scale in. The worst thing you can do here is not be able to trade small and just say, well, I'm going to sell and put my stop, I guess the point is the worst thing you could do is risk too much and, say I'm going to sell and I'll put a stop up here and I'll scale in higher. And then if the market pulls back, you end up risking too much and you panic and you get out of the trade. So if this is too much risk and, again, this is 23 points from here to here. If that's too much risk, don't take the trade. There's always trades. And I think that's a really important thing to remember is, it's really, I think one of the most difficult things to do is to be okay with, there's a few things I want to talk about, so I want to mark them before I forget. But I'm going to talk about that in just a second. So I'm going to leave this right here for a second. But one of the most important things as a trader is to become okay with what the market's doing, and also to realize that there's always going to be a trade down the road. I think it's so easy to get, you're trading and maybe you screw up or you miss this move, and imagine if you went to grab lunch and you were waiting for a breakout and then you missed this breakout. The worst thing you can do is be impulsive and do something you would not do if you had a profit. A good measurement to your trading and the trade you're taking is, if I already made my profit, would I take this trade? And what I mean by that is, you want to make sure you're not taking trades out of, due to loss, or, maybe I missed this move, I sold below this bar, got stopped out here, and, make sure I'm not impulsively selling just to make up for this loss. The 60-minute chart, one thing I talked about earlier, spike channel. Well, this is a biclimax latent channel, and we're probably going down to here. At the moment, this breakout looks like it's failing, so we could easily go all the way down to here. I don't know if we'll do that. This is the 60-minute chart, and this is the ES. We could, that could happen tomorrow. We could pull back first and then go down there. For the day session, and by the way, speaking of ES and the day session, I'm pretty indifferent with both. Sometimes I don't think it really matters which one you trade. I look at both. I've been talking about the Globex. I'm just going to keep 60 minutes up at the Globex session. So Rose says, I think we're repeating this day literally. Yeah. Okay. So remember that day, that was she actually brings up a good point. So before I pull up everyone can see it. It's on the Discord. I'll pull it up in a second. But what Rose is saying is, we're repeating this day. So maybe we're repeating, this could be a 20% time. Whenever you have a gap up trend from the open, there's 3 possibilities. And this is why the encyclopedia can be really helpful. If I can just remember this one slide and make it muscle memory, every time we get a trend from the open, I know that 60% chance trading range, 20% chance bear trend, 20% chance bull trend. Now, is the bear trend higher probability than the bull trend? Who knows? But the point is, this is 20% here. And there's a couple of, the more you can understand context, maybe the higher time frame. And I'll be honest, I'm not shocked at all by this. In fact, I'm actually kind of glad this happened, because it proves the point I was wanting to make on the day session or on the blog, and that is, traders, it's very common for the market to test signal bars and then sell off. Now, to Rose's point, let's go back to this chart. I think it was the 26th, and there we go. So here is a trend from the open that just melted away. And, a few problems with this trend from the open. Trading range on the open weak follow through here, and it's parabolic in nature. So buy climax, buy climax, buy climax, buy climax. Now, why is this? So take a mental snapshot of this day. Consecutive buy climaxes and sell off. And for those of you at the Orlando event, think back to some of the things Allie and Al talked about on this day. Now, how come this happened compared to, I've had a few of them, so let me just kind of, one in particular, if I can find it. It was a day where the moving average, I think it was this one, where the moving average, yeah. How come this day just completely rallied the entire day? Now, this was the lower probability day, but it was also a small pullback trend day. The rally was orderly, and it's very challenging to hold. I mean, if you buy here, sideways for this many bars, sideways for this many bars, hard to stay long. Versus 26, back to it. Versus this day, buy climax, another buy climax, 3 bars up, 2 bars sideways, 3 bars up, sideways, or even today. There we go. Open of the day, we bounce. So traders taking profits at the open. Strong rally, 12, however many bars, 8, 16, 8 consecutive bull bars in a row, and then 20, 6 bars in a row. So 8 bars in a row here, 6 bars in a row here. This is too climactic. And the more climactic the move is, the increased risk of a sell-off. Now, the higher time frame makes this a little more, again, I'm going to keep pointing this out because it's important. Just out of curiosity, I want to see what the Globex looks like. It's the same concept. So for those that want to argue that the day session is better than the Globex market or the ES is better than the ES.D, it really doesn't matter. And I think the sooner one begins to fully believe that, the better they'll be as a trader. That's the same logic as there's no time frame that's better than another time frame. What matters is, can you keep up with the time frame you're looking at? So here, let's just say is, outside up. So in theory, some traders sold below, got stopped out above. Other traders, maybe they sold below this bar. Maybe they sold below here. It doesn't matter. But the point is the market raced up to it, and it's finding sellers. Some bulls, they bought in here, scaled in lower, getting out break even. So this might be that start of that second leg, which is why I said in the blog, I think the bears will get a second leg down. And this could be the start of it. 15 minutes, well, let me just kind of zoom out. The only problem for the bears is the market just going to race down here or pull back and go sideways? I think the market will have to pull back first, but I don't think this is the low of the day. So for the bulls, better to wait. Some bears might take profits here, but there's probably sellers above and at least a small second leg down. But last thing I'll say about this is a great example of, you have to be okay with whatever the market's doing, and you just can't care. And if you care, you're going to screw up. So, who cares if the market sold off this many bars? The reality is this happens all the time on different time frames. It really doesn't matter. It's fun to see this sell off, and it's fun to see a double top measure move down and the sell vacuum back to the open. But this is a really great reminder that the open of the day can always be a magnet. And, it's important to always realize that the market can, when the market decides that something needs to be tested, it can do it really quick. I mean, when you look at this right here, you're thinking, it's easy to think there's no way the market's going down to here. And here's bar 44, here's bar 48. So in 6 bars, we undid all the damage done by the day. So what's the news event? Is there a news event that caused this? Who knows? Could be the election going on. And quite frankly, I haven't looked, and I probably will look just out of curiosity, but I don't really care. And you shouldn't either. For the euro dollar, small sell off, but nothing really. There we go. So sellers above, scaling in higher. Some traders deciding that 48, maybe it wasn't a good sell, and they didn't scalp out during 49, so they're trying to get out break even here. One of the reasons also that the market often pulls back is this right here. Whenever you're trading, we obviously know there's two variables you can control at all times: your stop and your target. If I'm selling here, if my stop's down here and target's down here, I don't think there's a 60% chance the market's going down here. I think it's just too far. So what that means is I have to think about it in terms of how far the market's going to go. What's the probability that the market goes maybe below 49 before it pulls back? And too many people, what you have to get into the habit of doing is thinking about probabilities as fluctuating with every bar. So here, good probability we're going lower. Here, same. This is getting too big though, so at some point the market's going to have to pull back. And my point by bringing this up is at some point the probability begins to favor the opposite. So instead of selling this close, instead of selling here, stop up here, target down here, it would make more sense to buy this close, target somewhere up here, stop down here. Now obviously what you would do in that case is you'd be buying and scalping out. So you buy, scale lower, scalp out. Other traders would sell more higher, and scalp out. The reality is we're probably not going up to here, and we're probably not going down to here. We'll probably do something in the middle. We'll go up, go down a little bit. I still think second leg down. So if I had to do anything, I would sell the close, stop up here, and probably look to scale in higher. But here you go. So far, disappointment. So if we look, it'll be, it's going to be important to see how disappointing. What can the bulls do here? Right now, the bulls have a breakout on bar 50 above 49, and they have a close on their high. And now they just triggered a breakout above 50 during 51. Will 51 close above 50? Will 51 be the same size as 50? And let's see what happens here. Some bulls, if they bought above 33.75, their entry would be, if they bought above 49, their entry is 34.25. So let's see, 39.50. So the market is up 5 points from their entry. So let's see what happens here. Will bulls that bought scalp out for 5 points? Right now they're trapped. They need 34.25 is their entry, which means they need 39.25 is, okay, they just got filled. So my point by saying that was they need 2 ticks above this bar to get filled. One for their entry and then one for price to go above their target. So if their entry was 34.25, then that means 39.25 would be their target and price would need to go to 39.50, which it did. So disappointing for the bears and a reminder that this might be more of a trading range. There were some bulls that bought scaled in lower, so they're deciding what to do here. This is, what's the probability of this being a second leg trap, leg 1, pullback, leg 2? I think that's low probability. There's probably sellers up here, and the market's going to go sideways. Some bears, I do think bears sold above 49, scaling in higher. They probably will make money. So I've got to step away for about 10 to 12 minutes, but the main thing right now is you're probably going to get a second leg. So this is probably profit taking. Some bulls buying aggressively, scalping out, but probably sellers up here. You have a 3-bar micro channel, so you might get a small second leg up, but I think we're going to go down here before we go much up here. So probably sellers up here, but you need a wide stop, better scale in, and low one below 51 might be more buyers below. 3-bar breakout, second leg down. I said over here that, give me just 1 second. I said over here on 51 that it's a low one short and the bulls might get a second leg up, but I thought we would get a second leg down. And the trick in this situation is to be able to trade small enough that you really can use a stop up here. Sell a closed market, probably a second leg down. Do I think we're going down here? I don't think we are. We might, but probably not. And I think this is, if I had to guess, we're probably going to close somewhere around here. Now, first leg, pull back, second leg, pull back, might get a third leg down. And, again, the low of the day is right here. We're not that far from it. 60-minute chart. I still think this is the target. So since this is the Globex market, I think traders will sell here. Probably sellers above, and the market's going to fall. I don't know if it falls just below the 10 o'clock low or the 9 o'clock low. I think one of these lows will get hit. Probably both of them. This is strong enough that this is similar to the daily chart, where strong enough sell-off, you're probably going to get a second leg down. Now, obviously, the pullback's pretty deep, but even though this is a 4-bar micro channel, and it's probably going to make the market go sideways, I still think that here, traders will sell, scaling higher, probably make money. So what about buying here? If this bar closes on its high, 55, you can call it a second failed breakout at the open of the day. I would not. After a 4-bar micro channel, really 5 bars, probably sellers above. Open bar 55, an inside bar when it closed, traders just sold the close. 6-bar micro channel, so probably still sellers above. Spike, pullback channel, possible 3 pushes down, 49, 54, 58. Getting close to the 3 low, probably will have to get there. And the 60-minute moving average. That's what I think this is going to also target here. And now, what happened to this really strong bull day? Here's the day set. Here's the daily chart of the .D. And now we have a big bear bar. So, part of it, it's helpful. You don't need to look at higher time frames. It's helpful if you do. And I think that just takes practice. It takes a long time to be able to look at this 5-minute chart and then be able to think or imagine what the daily chart looks like. And that's why a lot of traders, you'll hear Al, he says it all the time, traders don't need to trade multiple markets. And the reason is there's so much going on just the 5-minute of the S&P, whether that's the SPY, the E-mini, the micros. There's so much going on that most traders need to just focus on one market, one time frame. So still no reason to buy. The market's forming gaps here, kind of a gap here. Although I do think probably profit taking. Some traders that sold below here have a good bit of profit. We're probably going to pull back soon. Reasonable for always in bearish to exit above. Micro channel 57 to 51, so 6 bars. Probably sellers above, but it's a wedge bottom 1, 2, 3, 1, 2, 3. It's I don't know if it's good enough. You can buy it for a swing, betting that the market stays above yesterday's low. I would certainly get out of swing shorts. I don't know if the probability is worth it. Final flag 55. I don't know if the probability is worth it to hold short betting on the second leg after this micro channel. Possible 2 legs down in a trading range day. Obvious target above open of the day. But as far as buying above, I would not. I'd wait for more buying pressure or a second entry buy. Some bears sold the close at 56, disappointed 57, trying to get out break even here. Some traders sell, they sell more, they get out break even right there. Bulls, some traders just try and buy 50%. What about the traders that buy here and put a stop really far away, like some kind of measured move somewhere down here? So if they buy and buy more lower, they probably will make money. And the reason is the downside is limited. So some traders buy above, they use a wide stop somewhere down here, and they wait for a bull bar. And they buy more above the bull bar, and then they decide whether they should get out break even. Other traders, some will buy above, maybe buy more below the bar, and then double their position above the bull bar. The risk they face is some sort of surprise move. Most traders should not take that trade because the management is too difficult, and they'll trade too large. They'll think they can do it, but when it comes time to actually scale in or double your position, they'll freeze up. Right now, the market's deciding. Bears sold the close at 56, and now they're deciding what to do. So this is a great example. Reasonable buy, low one short. So for the bulls, they see a breakout pullback buy. Some bulls will get out below this bar. Other bulls will hold below 57, betting that this is a higher low. Bears deciding, if they sell below 56, do the traders that sold the close at 56 get out break even at the 56 close, or do they bet this is the low one short and we get a measured move down? We're so close to the moving average, the 60 minute. Actually, let me look here. Oh, this is the .D. Let me go to we're so close to the 60 minute moving average that 3808.9, so it's basically right here, that we may have to get down to 3808 before there's buyers. So some bears will take a chance to sell below this bar, betting we get down to here before we turn up. And how they manage it? Well, some will put a stop up here, and others, maybe they get out if this bar is a weak bar or if it closes on its high. Other traders will just hold and take it for a swing. So right now, it does not look like there were as many traders desperate to get out at the close of 56, which makes me think that we're going lower, probably down to here. There will be bulls, though, that bought above this bar and bought more lower, scaling in. So what do I think is going to happen? Well, I think we're going to have to get back to this bar. So I'm going to mark it more for a mental reminder. This might just be another wedge. 1, 2, 3. Now, we do have this measured move projection from the close of open to 46 to the close of 48, takes us down to there. Probably we'll get there. Do I think that the market will get back to 48? I mentioned earlier that some traders might buy and scale in lower. I think it will. And, one thing with that, that's not an ideal trade. Usually, it's really better to scale in after the second leg. You really don't want to scale in on the first because you don't know how far the second and third leg can go. So, but I do think traders that buy here and, maybe they buy more down here and these wide stop, what's wide, something like this, they'll probably make money. Bears trying to trap the bulls that bought above 57. Let's see how this bar closes. We're at the too low, so that's an important price. You can see the daily chart getting a strong signal bar. The bears want the bar to close far on its low, and they want it to close on its low as much as possible. Possible measuring gap. I think this is too far away, though. I don't think we'll go to here. We might. but at the moment, probably more sideways. This is looking good for the bears. This is why I was not a fan of buying above 57. It's a micro channel, and the channel's tight. And obviously magnets below. These 3 low, 60-minute moving average, which we're there now. So it's interesting. In a matter of just 2 hours, we completely undid more than the opening day's range. So whenever you have 1, 2, and 3 pushes, whenever you have a third push, you have to always question, will it fail? And here's a good example, by the way, of the November the 1st short. Traders sell below this bar, you pull back, goes their way. You can see when it retests the November the 1st signal bar, traders sell. Bar becoming big and climactic, enough of a surprise that if this bar closes on its low, you'll probably get second leg down. And this is the problem with buying here. It's a really challenging trade to manage because what's a wide stop? Probably at least this at a minimum. And if you bought above this bar, I'll do the math later, but let's say you buy one contract here, a second contract here, and then you wait for a bull bar. And this is probably strong enough you'll get a second leg down. So you probably need a micro double bottom. And at that point, you're probably so disappointed you want to get out break even on the trade. And the fundamental one issue with that trade is you expose yourself to a lot of risk, but also you miss out on all of this. One thing interesting about the weekly chart, some traders buy this close, disappointed on last week, buy more maybe at the low of the bar, so they bought more lower. As the market turns up, they start trying to get out, break even on the entire trade. I know it seems crazy, but these bulls that bought more here, and they doubled their position above a bull bar, they will probably make money. Rose makes a good point. We're probably at the open of the week. Clearly we are. It's right here, so I'm going to go ahead and draw that. 37.93. But as far as the buying above this bull bar and scaling in, I see that more as a fun tidbit. I certainly do not think traders should take that trade because for most traders, it's far too difficult for them to manage. The open of the week is 3793 even, so this, well, actually, I don't know why I'm doing that. Today's Tuesday. I had a brain block there, so probably, we really make it down to the open of the week, but there might be more profit taken here first. Daily chart. Really impressive. That's why I was saying, even though the market's reversing this, I still think these bears are going to get their second leg down. So what do we do here? Is it sell the close on the prior bar? Probably. My issue with selling down here is the climactic behavior of this move. You can treat it like Forrest Gump. Sell below the bar, stop up here, no reason to get out. No reason to get out here. Maybe you put your stop up here and you just hold. But this is unsustainable price action. This is not typical price action. And I like typical price action. Trading ranges, failed breakouts, and the reason I like that is it's easier it happens most of the time. How often do you get a trend from the open that rallies like this and sells off? The other problem I have with today is think about, use your imagination, think about the daily chart for a minute. How much bigger is this bar going to get? So if I'm selling down here, what's the range of this bar? Here, here. So here's the range of the bar. Better yet, let me make it easier to see. Here's a rectangle. Here's the size of the bar, give or take. Let's just look over. Certainly this bar and this bar are bigger. For the most part, this bar is pretty big. Bigger than that. So even though this range is big, you have to ask yourself, how much bigger is this bar going to get? Consecutive bear bars, very strong close, good, great looking bar on the 60-minute chart. Probably sell the close stuff up here. First look will fail. So this whole thing is a breakout, and traders will sell it and put their stop all the way up here and scale them higher. But they're doing that on the 60-minute chart. On the 5-minute, it's still too early to buy, but this probably will start to go sideways soon. I didn't buy it, but please tell me why you're so sure not to buy it. It'd be interesting to see what Rose actually says on that one. I think two problems is the 60-minute moving average low of the day in this micro channel. It's just too tight. And if you're buying here, let me make the chart a little bit bigger. If you're buying above, trade station might freak out for a second. If you're buying above 56, 57, what's your goal? Are you buying it betting that it's already low probability buy? So if you buy here, 1 times your risk is this. So what's the probability price will go up to 83 or 38.30 before it stops you out? You know, it's low probability. And even here, this is one of those problem situations for the traders that buy. Maybe they buy more and they double the position here. You know, it's usually better. Let me back up. What I don't want to give the impression of, most traders should not buy 57 for the simple fact that it is probably going to be a minor reversal if the bulls need a double bottom. There will be traders, institutional traders, who buy here, buy more below the bar, and so, or they just buy 1 contract, and then they buy 2 contracts, effectively doubling their position above a stop entry. Why a stop entry? The reason is it will drastically lower their entry price and prevent them from getting trapped. You know, you don't want to, those institutions are not going to buy, and just buy all the way down and then get forced out of the trade. Those institutions will, even if their second entry is down here, they will take the buy. You know, I'm talking about institutions that they will not sell, you know, in theory. But right now, it's sell to close, stop up here, probably a second leg down. The risk the bears face is 1, 2, 3 consecutive bear bars, and the reversal left could be sharp. You know, ask yourself, you know, if you sold here or here, what are you thinking down here? Are you thinking, you know, oh my gosh, I've got to double my position, I need to get short even more? Or are you thinking, you know, this is a pretty good trade, I need to take my profit? Obviously, you're interested in taking your profit. So Rose's reason for not buying above 57, this bull bar, is bear leg down, gapping bear bars. So strong bear leg, lots of gaps here, even gaps in here, and arguably, you know, gap here. Impulsive leg down. So I would see that as, you know, very strong, and it's a statement by the bears. Smart money will reposition and add their sell orders to sell more, so expect a bear flag. So bear breakout, pullback, likely a bear flag, second leg down. Bear breakout, probably a pullback, second leg down. What would I do if I was an always in trader? Always in bears, selling here, selling here. They get out, they have to sell again below 52. It's reasonable to get out above 57. And the traders that did, they arguably have to sell again below 58 or 57. So this is kind of what I'm talking about here. I'll do the math later, but okay, perfect. So let's just keep this easy. So if the trader buys above, see if we can just draw it. So if they bought one contract and then another contract, that's break even. But if they were to buy, I'm going to do this on my phone, it'll be easier. Let's see here. 3823 is their first entry. Mouse. And 3802 is their second. 3809 would be break even. So I'm going to just write it down before I forget it. 3809. So why is that break even? Well, buy one contract here, two contracts here, break even is 3809, which is just under the 3 level. So what do I think is going to happen here? I think the market is going to get to the 3809. What about the traders that bought one and then a second and then bought two here? Well, they still will probably be able to avoid a loss. 3823. Let me make sure I did that right. Yeah, I did that right. Okay. 3814. So the first traders are already out, and the second traders are going to be out. So I don't even need to do it. It doesn't matter. So, this is my problem with, and we probably will get back to here. I'm a little surprised. This is why I said most traders should not take that trade. Buy one, buy another contract here, double their position here. It's too emotionally difficult for most traders to do that. The institutions that are doing that, they can trade extremely small and can use really wide stops. So again, am I at all surprised this happened? Not in the slightest. First leg, second leg, third leg. Whenever you get the third leg down, the probability starts to decrease. When moves become climactic, nobody wants to sell. Everybody wants to take profits. The traders that sold here, Al calls them weak bears and smart bears. The smart traders, kind of like what Rose was saying, the smart money was selling here and selling pullbacks, loading up on a position, betting on lower prices. Those bears, the smart money traders, or the strong bears, as Al would call them, they're taking profits down here. They're seeing this as a gift. The strong bulls, they bought in here, they bought in here, hypothetically. They're not going to get out here. If anything, they're going to see it as value and be thrilled to buy more. The weak bulls, they may look at it and say, gee, I'm going to be a smart trader. I'm going to buy the 57 and put my stop down here and scale in lower. But they can't take the pain. They cannot take the pain. They look at 50. They look at this bar, 59, and they say, gee, that's way too big of a bar. I can't take this loss. I'm going to get out. And they end up getting out right at the lows. So it's really important for those of you that were at the Orlando event, I would really focus on what Ali talked about first legs, second legs, breakouts and second legs. If you look at third and fourth legs in a move, they often fail or don't go that far. So what do I mean by that? Well, first leg, maybe second leg, third leg, or leg one, leg two, third leg failed. First push, second push, third push, it failed. First push, second push, it failed. leg 1, pull back, leg 2, pull back, leg 3, maybe, but this is a micro channel. So leg 1, pull back, leg 2, leg 3. So what do you do here? Well, it's probably by the close and probably going back up to here, maybe to the open of the day. Big sell-off, big rally, probably sideways. So I had this marked, just in case I forget it, 57 scale in bulls. Another thing I said about bar 48, the bears that the bulls, there will be some bulls betting that bar 48 was exhausted, and they bought it. And bigger bar, big bar, big bar, another big bar. Some bulls buy it and they put a stop, maybe a measured move down from this distance. So they say, okay, I'll buy here, I'll buy more, maybe above a bull bar or like that, and use a stop twice the size of this range. I know that's more food for thought, but I think it's the reason I say all that is there are institutions that do that will do that. And it's really important to find a way to remind yourself that most of the time, most breakouts just don't go that far. And to be suspect of third and fourth legs, which is really important. Now I'm going to shift this because I think we're going to here now. As you can see, bulls made money. This is a pretty impressive bounce here. And, as a bear, I was hopeful. If I'm a bear, I wanted this bar to close on its low, but now I'm thinking, darn, now we're going to get a bad looking, a crummy looking second entry short, breakout, pullback short. And it's also a micro channel. I don't know, maybe the market's going to reach up here. So this was a sell for a scalp. Traders will sell this, they'll sell here as market goes up and scalp out. What do you do here? Well, it's probably buy the close, stop down here or here, betting on the second leg up. It's possible the second leg could be all the way to here. Open at the day's a target. I'm going to draw it here. I'm going to move it here. I think we're going to end up pretty much at the open of the day. So now let's go back to this day. Which one is it? Well, it's really both of these. It did technically do the 20% in reverse the rally, but it's also a trading range. And one thing I forgot to mention that I want to say before I forget is the other fundamental problem with the bear breakout on 59 is the range of the day. So at this moment, here's the open, here's the, I think the best way to explain this. So I'm going to try and draw here. The problem with this range is here is the open, here's the basically the first part, here is the second part. So if you think about this, it's a doji bar. So at this point, go back here, when the market reaches the market here, it's a big doji bar. And when the market gets down to here, let's say, this is kind of bad drawing, but it becomes more like this. And, same thing here. But the point is, for this day to really become a strong trend day, you need a big body. So if, you really want, I'll do the arrow. There we go. You really don't want, you need a body bigger than the tail. And when the tail is this big, from here to here, that means you need a body bigger. So what that causes is it makes more traders even more confident that the market's going to fail down here. It's the same thing as, we've had some decent days of this, but one of the problems with small pullback trends is, let me just go to this chart. This is also very important to understand, so I would definitely write this down. On the start of this, it's reasonable for this day to become a small pullback trend because the reversal down was not that big. So there wasn't a lot to reverse on the day. Here, this is going to be very difficult to become a small pullback bull trend or a bull trend because the market would have to reverse this entire rally. Let's find another. Same thing here. Big sell-off, going to be very difficult to reverse this sell-off and create a trend. Big sell-off, we have a wedge bottom, opening reversal. Going to be difficult to reverse this entire move. So even if we do, even if we do, probably a trading range. And while we did rally, we went sideways for most of the session. So you can see a lot of your small pullback trend days, they have a small tail on the bottom. Big sell-off, big rally, big sell-off. So kind of a surprising day. Big rally, big sell-off, but trading range. Small sell-off, pretty big rally. Even here, big bear bar, rallied, a buy climax, another buy climax, another one, and trading range. Even here, wedge bottom, pretty big rally, sideways. Decent size sell-off, pretty good rally, but sideways for several bars, and bears gave up. So part of that, in part why that happens is when the market's a trading range, when the market's in a trading range, traders trade it differently. So when a bear looks at this, they'll say, yeah, this might be a strong reversal and the market might reverse here. But the problem with that is if we get up to here, it's probably a trading range. Therefore, there's probably sellers here. So what does everybody do as the market goes up? They take profits and they start scalping. Bears, they start selling up here knowing the market's going to be in a trading range. And that's what happens. So back to the open of the day. Above the 58 high, which was the magnet, probably going sideways here. Strong enough rally, first reversal down, probably will fail. Low one short, but even though it closed on its low, after this big bull bars, traders immediately bought the low. So traders buying, betting that there will be at least a second leg above the high of 65. Again, I would not be surprised if we get back to the 48 close. That's pretty common. The spike pullback channel, even though this is parabolic, it's still reasonable to be the bottom of it, to be the start of a channel, so we can easily get there. One of the things I've said it a couple times today, but I really want to stress it, and that is you have to find a way to just be able to not be hopeful. In other words, to me, I see big up, big down. All of this is a vacuum. Vacuum up, and the market's racing up to a price. When it's satisfied with the price, it races down. It's racing down to a price level. When it's satisfied that the price level's there, the market races up. So, you can't see this as emotional. It's purely the market probing up and down. And every second of every day, traders step aside, and it causes the market to race. How did the market reverse right here? Well, if enough traders believe that the market's going to get to the open of the week, then bears sell aggressively until it gets to the open of the week, and bulls, they just step aside. If you thought the market was going to get to the open of the week, you wouldn't buy here. You would instead move your buy limit order to the open of the week. So that's why when the market could sell off, and it can just immediately reverse. So 2 legs up at 48 low close. We could easily get to the 50 high, 51 high. Probably more sellers up here though. Big down, big up, probably sideways. And I think it's going to be challenging to get far away from the open of the day, this green line. For the bulls, the other problem the bulls have is 2 legs up and it's a trend line break, but they probably need a deeper pullback. So this is still, while this is definitely impressive for the bulls, I think they'll have to get a pullback. So for the market to get, there's one obvious target, and I don't know if we get there today. We might. I don't think we will. That's the 38 low, the start of where the bulls got trapped. And I'm hesitant to say we get there because it's far away. But one of the things you have to think about is if this is an obvious target, we could get there in the form of 2 legs. So maybe leg 1, pull back. There's not enough time today, but hypothetically, if this was just a continuous chart, if we rallied up to here and then we pulled back to the start of this breakout point, 62, and then rallied again, that would be enough to get us there. But it's already 2 o'clock, it's already bar 66. There's less than 20 bars left in the day. Really, there's 15 bars left in the day. It is not worth, probably sideways. Bulls are trying hard to get up to here, but I don't think there's enough time left in the day. Probably going sideways into the close and will not get far away from the open of the day. I've seen a couple comments here and there saying that it's a V bottom, and you can call it a V bottom, but I don't see this as a V bottom. It's multiple reversal attempts on the way down. A true V bottom would be sell off and then a rally. That would be a true V bottom. But when we look at this, it's not a V bottom. Here's a bottom attempt. Here's a bottom attempt. Here's another bottom attempt. 3 pushes. 1, 2, 3. There's a final V bottom attempt. So my problem with the logic of a V bottom, even this is not a V bottom. It looks like a V bottom, but you have to really use your imagination and think for a second of what this is. Here's a tail. Here's another tail. Here's another tail. So let's go to a 1-minute chart and find this. 1, 2, 3, 4. So reversal attempt here, reversal attempt here, here, and here. It's not a V bottom. If we go to a 2-minute chart, here, 1, 2, 3, reversal. So I know it looks like a V bottom, but you have to think about it, as far as what's the point behind what is a V bottom? And what's reversal attempt? You have to really become comfortable with wedges are not always going to look like a wedge, but it's 3 pushes that's most important. I do think the reason I have this line right here is, well, I'll make it something else. I'm going to get rid of this since the market already reached that. I think we will get to here, but the problem is time. It's not if we're getting to here. We more than likely will. I think the problem is this, though. If this is the first leg, this would be the pullback needed. If this is the second, if this is the start of the first, we're probably going to have to pull back leg 1, more complex pullback leg 2. I'd be curious if here's the first leg and we pull back to the 67 low, takes you to the high of the day. Also on the 60-minute, strong sell-off, disappointment, probably going to have a deep pullback before we go higher. Oh, sorry about that. I had to check a setting, and I had to hide my screen, and then I realized I had to turn it back on. I meant to just mute it. I got two computers next to me, so I was a little sidetracked. So we're trying really, really hard to get up to the 34 low, but the challenge is I still think it's too far away. It's 230, and the problem is I'd feel better about it if we were not already in a buy the close market, and arguably we've been in a buy the close market since bar 62. So big bull bar on 72, probably climactic, some buying into the close. We might be close enough, it's possible we're close enough to the 74 low that we have to get there. But, this just goes to show you, it's really no different than the 56 low. Again, I've said it numerous times here, but you cannot look at this and say the market can't do something. If everybody agrees that we're going to have to get to the 34 low, then we could just race up to it. There's the old saying of always and never, the two things that don't exist in the stock market. But this is probably vacuum. And this is pretty incredible. It's very exceptional that the market is able to rally all the way up to here and stop, or sell off all the way down and then just rally all the way up. It's very impressive. But for me, again, I don't like these situations, because I don't like very strong moves down. I like this, sell the close, second leg down. I don't necessarily like this. I'm more inclined to look for a reversal. Here, I don't like this either, because I'm more inclined to look for a reversal. Buy climax, another buy climax, another buy climax. But this is strong. So let's see what happens right here. This will be interesting. So 60-minute chart. Don't want to point this out. Let's see if there's sellers in here. Probably not enough time left in the day, but it's pretty reasonable we could see selling into this area. Bulls by the close, scaling lower, and probably disappointed. Well, let me restate that. Bulls buy the close, they scale in lower, disappointed, they'll take profits. Other bulls buy, knowing that there's going to be selling right here, and they'll take profits right here as well. And if you're asking if this is a low probability move, there's an easy exercise to figure that out. Go back over the past 100 days and find something similar to this. Find a large rally, big sell-off, and then a rally testing back into that range. Or find the opposite, where you have a big sell-off, large rally, and then a big sell-off testing the original portion. It's not that common. I didn't do anything in here, but I do think at this point, you're probably going to reach both the 34 low and the 38 low. And, it's by the close, but this is the profit-taking area. Again, to me, it's the same situation as if you're buying right here and your stop's down here, what's your target? What's your goal? This has good momentum, and we could easily get back up to here. But there you go. The challenge, though, is what are you willing to risk? Then this is a good statement. This is a good statement by the bulls. But the problem is this will have influence. you're trading a 60-minute chart, just do like this. You're trading a 60-minute chart. Are you betting, are you willing to buy up here? And if you are, what are you betting on? Are you betting on a breakout to the upside, or are there more likely sellers up here? I think there's sellers up here. And the market's probably going to go sideways. I'd get out of longs below 74. Not worth the risk. Late in the day, probably profit taking up here. And even though this seems far away, again, if you're buying here, what are you willing to risk? Or what you're willing to make? If I'm long, at a minimum, maybe my stop is a measured move down of this bar. So if I'm long, target here, stop here. Is this a 60% trade? No, I don't think it is. And because of that, that makes me think we could easily sell off here. If enough traders give up, we could fall all the way down here to here. So not really that good of a place to hold on to longs. You always have to think about risk reward. One of the most important things, and part of the reason why I think this is a really just fascinating day, but actually it's kind of funny because I really agree with what George has said just now. Al said, trade like you're stupid, trade like Forrest Gump. And, as far as, and TRST and I will talk about that on the, I'm assuming you're talking about the daily chart. I'll talk about that here in a few. One of the things that's really important that the traders begin to realize, really good traders, Rose does a good job of this, is they tend to take the same trades over and over. They pretty much know exactly what they're looking for, and if it doesn't meet what they want to do, they just don't take it. And that's really important because it's really easy to look at the chart and become frustrated. The market's rallying, but you wanted to fade with limit orders, and you're missing the move, so you do something impulsive and you lose money. When most of the time, Al says it every time he's in the webinar, if you just look at your trades, and you'll notice that you take a lot of really good trades, but most people take too many dumb trades. And if they could fix the dumb trades and stop taking them, they would have completely different results. So the point is, traders have to find a way to limit the dumb mistakes. And the dumb mistakes usually are impulsive. So if you miss all this move down, and you missed all this up, don't worry about it. The reality is most days don't do that. And one time, it's funny, there was someone that they said this, and what they said was, and you all know this person, at least by now, but one thing they said was, crazy moves make swing trading seem like it's really, really easy, and it gives beginners the wrong impression that they should swing trade all the time. And traders should start out swing trading, but they have to realize that most moves don't go that far. This is not going to be most days where you get a rally that lasts for several bars, you get a sell-off that lasts for several bars, you get a rally that lasts for several bars. Just look at it. We actually had a day where we had more trending behavior than trading range behavior. We actually only had here's 8 bars of sideways, here's 15 bars of sideways. The rest were pretty decent trends. So I wouldn't worry about this day. It's important to find a way to just find the chart to be really fascinating. So the selling off to the 72 low, and this is why I didn't want to buy in that area. I'd rather just let it go. one of the things that I think is a really interesting concept, and I've experienced this so many times, and you don't realize it until it was actually Ali Afshari that really kind of made it hit home. But everybody's experienced how they can, the amount of times where I would have a losing day and I'd stop trading and I would just watch the market all day and I would just think about what the market's doing. And all of a sudden, it felt like I could read the chart and understand exactly what's going on and not have any issues. But then all of a sudden, when I would trade the next day, I would start losing. I'd make mistakes, and I couldn't figure out why can I read the chart accurately, but when I try and manage orders and take trades, I start losing. And the reason for that is it's a matter of how much bandwidth you have mentally. Ali's a big proponent in you only have so much, you can only make so many decisions at one time. And the problem with, one thing I really agree with Ali about is, I made a comment earlier this morning about, I'm actually going to repost it because I think I want to talk about it for just a second. And give me 1 second. And if you want, it was at 8:09 this morning, so I just put it in the chat at the bottom. But one of the things Ali mentioned was you really have to understand your trading and what you're doing to a deep subconscious level. And the reason for that is you don't have enough time to think about what you're going to do and look at the chart. You've got to have some, it's got to be drilled down into not having to think about it. So when the market's racing down, you just sell. Market's breaking the downside, I'm going to sell, use a wide stop, go for a second leg. Or multiple buy climaxes, I don't trade the third leg, I'm not doing anything. And I say all that because it takes a long time to develop both. And sorry about that. I'm sure that was loud. What I like to do is I like to think in terms of flowcharts. And, what I do is I think about things as far as trend trading range. So if I want to buy in the bottom of a trading range, I might think in terms of, and one day I'll share one of these. One of the ways I try and think about that is to kind of mentally map out the market cycle, such as the market's in a trend or trading range. If it's a trend, it's a breakout or a channel, and really kind of just mental, really mentally think through it, because there's not enough time. I guess what I'm saying is, if you have trouble, if you can read the chart well, but you're having trouble actually taking trades and making money, but you understand the chart pretty well, one of the challenges you probably have is you haven't mentally rehearsed your trading and what you're trying to do. You don't know exactly what you're doing. And you may understand it from the standpoint of, I know how to trade and I understand how to read the market, but I can understand if consecutive buy climaxes and the market's going to enter a trading range. But if I don't know exactly the type of trades I'm looking for or what I'm looking to do, when it happens, I'm not going to be ready. Same thing here. If I don't know what I'm looking for or what I'm willing to do and what I'm not willing to do, then when something happens, I won't be ready. So really something to really think about. But overall, I'm not surprised this is happening. In fact, I've said a couple times I thought we'd reverse and test the open of the day. This is why I'm not a big fan of buying in here. I don't want to get trapped in this. So overall, really fascinating day. Feel free to ask questions in Discord. I'm going to start the day in just a second. And for those that are watching, I'm going to turn on the question box in the webinar. So, very kind of a crazy day. really fascinating day. But to me, these days are, they're great swings, but it's an entertainment kind of day. It's entertaining, but to me, I look at this day and I put it in the category of, less than 5%. When the market usually does not give you these good of swings, the range isn't that big, so therefore I'm not going to sit here and try to figure out how to trade this kind of day like every day, because it's just not real. But it's great swings, and for swing traders, they can do phenomenally well on this kind of a day, especially always in traders. As far as the daily chart goes, strong 3 consecutive bear bars. I still think the bears will get a second leg down. I think the upside is limited. And one of my thoughts was we may have to get all the way up to this high before we find sellers. And the reason for that is trading range price action. It's just pretty common where, let me find an example, even on like a 5-minute chart. Kind of like here. Goes, well, let me find a better one. They're better. They happen more frequently on trading range days. But, something like this, rally, deep pullback, missing the breakout point, going higher. But regardless, 3 consecutive bear bars, second leg down, probably will happen. Now, it's a 4-bar micro channel. There might be buyers below. But I do think sideways to down is more likely, and some form of bottom down here, maybe 3,700, maybe the 1026 low. I still think we will get to the 4,000 big round number, but I don't think we're going straight up. But I do think, again, this is a good lesson that when the market tests the signal bar, whether it's here or here, it can easily sell off once it gets there. And that is due in part to bears shorting aggressively when it gets there, but also it is due to bulls who bought, scaled, and lower getting out break even. And also, trend from the open day, I always think about this chart. This is probably one of my favorite charts in the encyclopedia chart patterns. And the reason for that is when you get a trend from the open, if you can memorize this chart, it just gives you so much direction on what to think about in the day. 60% of the time, it's going to do this. And 20% of the time, this or this will happen. First bar of the day, bar 1, it's a big bear bar, and that lowers the probability, forcing traders to sell in the middle of this high trading range, probably more sideways. You can sell it, put a stop above, but big bar, big risk. I'd rather wait for consecutive bear bars closing on their lows, and ideally a strong breakout and follow through below all this. I don't want to sell in the middle of the trading range. Also, 20% chance the market is going to go sideways on the open of bar 1. In other words, 20% chance this is the high of the day. I want high probability. I don't want low probability. Bar 2, consecutive bear bars, probably sellers above bar 2, and at least a small second leg down. Bar 3, disappointing. Opening reversal, you can call it a micro wedge, 1, 2, and 3. It's an okay swing buy, but after 2 consecutive bear bars, probably sellers above and at least a small second leg down. Some traders will buy it, betting that 78 in bar 3 is the double bottom and go for a measured move up. Or a test of the 2 low or the 3 low. Almost went outside up. You can call it a micro double bottom, 3 and 4. A lot of traders who sold to close at 2, disappointed on 3. They'll use 4 to get out, break even. 5, breakout. Is it always in long yet? It might be, but forcing you to buy at the open of the day and the high of bar 1. So probably better to wait for follow through. But it's a 3-bar micro channel, might be by the close. Ideally, better to wait for one more bar because the pullback could be deep. and that's why it's better to wait for one more bar. Bar 6, bear bar closing on its low, 4-bar micro channel, forcing you to trade or sell just above the moving average, so not an ideal sell. Bar 7, bulls bought the close of 5, disappointed 6, trying to get out, break even, back at the 5 close. So they buy, disappointed, get out, break even. Bar 8, you call it a micro double bottom, down and up, down and up. Bulls trying to break above this double top, breakout, pull back, buy. It's an okay buy above 8. If you're buying above here, you're betting one measure move up and an upside breakout in early low of the day. Otherwise, better to wait for the breakout and see the follow through. 9, you can call it a double top, you can call it a wedge. 1, 2, 3 pushes up, or 1, 2, 3, doesn't really matter. And 10, strong breakout, 3 bars up, bear bar, 3, 4 bars up, still looks like a leg in a trading range, and 3 pushes, 1, 2, 3. 11, follow through. The follow through it's a bull bar, but it's a small bull bar, so that increases the odds that this might be more of a leg in a trading range and not the start of the bull trend. We have an open gap, the 7 low and the 4 high. That increases the odds that the gap above 9 and below 11 might stay open. So probably buyers below in a second leg up. And that gap stayed open. 12, high 1 buy. You can take it for a swing, betting that this gap stays open and this becomes a small pullback trend. 13, 14, 3 consecutive bull bars. Lots of bull bars in here. Still probably buy the close, but becoming climactic. 1, 2, 3. 3 pushes up, so parabolic. 15, another buy the close bar. But high 1 buy, you have to ask yourself, how much higher is the market going to go? Probably going to pull back soon. And 15, 16, still buy the close. 17, bear bar, probably buyers below here, scaling and lower, getting out, break even. And 2 legs down, leg 1, pull back, leg 2. What happened here? Why did this bar, let me just check first. It never triggered. Why were there more sellers above here? Well, typically, traders want to take a high 1 after a strong breakout, pull back, buy the high 1. Traders are less willing to buy the high 1 after climactic movement. So there might be more sellers above 18 than buyers. Let me do it like that because it's kind of in the way. 19, second entry short, but minor reversal after all this buying pressure. Probably limited downside. 20, testing the 11 high and reversing up. So this gap is still open, and you have to wonder if the market will try and form some kind of measured move, maybe from the low of 3 to the high of 11. There we go. So 20, second entry buy. 21, breakout above the 17 high. Is it by the close? Maybe. I mean, it probably is. I think we have to get to the moving average soon. I said it earlier. My problem right now is we have not closed below the moving average. We've only spent 1 bar below the moving average, or 1 close below the moving average. Give me just 1 second. All right, I'm back. So one of the issues I had right here was, get my mouse on the other screen. There we go. It's right here. So even though there was obviously a Globex market in between all of this, when I look at this chart, I see 1 close below the moving average. It's all the way over here. So that means there's 60 bars almost, with 1 bar out of those 60 below the moving average. To me, that is climactic, which increases the odds the market's going to have to go below the moving average. So buy the close, but tricky. If you get a bear bar, I'd get out. 22, a pause. 23, second leg up. still by the close, but again, still climactic. And 24-25, third push up. So breakout, pause, another breakout, pause, another breakout, pause. So what does that tell you? When you get a breakout and a pause, another breakout, pause, and then a third breakout, and it's third, that is a wedge. That's a parabolic wedge. And look at this bar. This bar looks better than these. So if I bought above this bar, I'm happy with this, disappointed, happy, disappointed. And then I'm thinking, gee, what a gift. I was worried that the market might reverse. It's not reversing. I'm going to be smart and take my profit here. And in this case, the market went a little bit higher, and I would definitely get out below this bar. The reason being, parabolic wedge. 1, 2, 3. Bears, aggressive bears sell. Bulls will get out. Let me try and make this a little bit bigger. And while I'm moving this, the key with all this is to look at a lot of charts and really just think about price action and think about what bulls and bears are doing. And you have to watch the video, of course, read the books, and then just really think and use your imagination. If you want to get more comfortable looking at Forex, look at Forex charts. If you want to get more comfortable at daily charts, you have to look at a lot of daily charts. So traders get out. Bears see a wedge. They'll sell, betting on a few legs down. 28, good follow through, tight channel. And then 29, big bull bar. You can argue it's a high one buy, but this is kind of one of those, it's a trap bar. It's one of those, Ali calls it a kind of a gotcha bar. And the reason for that is it's testing the bottom of this exhaustion bar. This might be more due to bulls buying down here, bears taking profits, and both of them are betting that the market's going to test its entry price. So as soon as it tests the entry price of the 28 low, bears sell. In other words, where I'm getting at is you sell below this bar, stop up here. It goes more than 1 times your risk. So maybe you scalp out of the trade. Some traders sell below it. They take part off. They move the rest of their stop to break even, which is kind of a really dumb idea if you think about it. The math didn't make any sense. And they get stopped out right here. Bulls, or 29, did not trigger. 30, an inside bar. Some bulls front ran, bought the close, disappointed. Now they'll use the bounce to get out, break even. And 32, second entry buy, bulls buy, stop below here, and still went outside down. Why is that? Because we have to get to the moving average. 32, you call it a double top at 31 or with 27. You take it for a short, forcing you to sell. You can, but it's forcing you to sell at the bottom of a trading range, and the downside is limited. So there's probably buyers somewhere down here, not really the idea of a sell. And then traders that did sell, when they see 34, they get out. 35, wedge, 29, 32, 35. Okay, swing buy, but not at the moving average, which lowers the probability. 36 was the entry bar to 35. The bar was small, therefore traders quickly, most of them would be quick to get out, which is what happened here. And 38, really 37 and 38, it's an expanding triangle on a smaller time frame, 36, 37, 38, and then here and here. We're in the middle of this range. Expanding triangle is a sign of trading range price action. That increases the odds that the market is in a trading range. There were buyers below 36 and 37, which is typical, but we have not touched the moving average here. And this body is small compared to this tail, so it might be more sellers above. Good bar 39, testing the 33 high, but this might be more of a sell the close bar than a buy the close bar. I talked about it during over here, but it's 2 legs up, and it's a possible double top, lower high major trend reversal with 33. Some traders will sell this close and put their stop 1 tick above 33, betting on a major trend reversal and a large sell-off. That does happen. Other traders wait for this, and they sell below here, stop up here. Good bear bar 41, but then bad follow through 42. Most major trend reversals lead to trading ranges, and therefore they go sideways. So it's reasonable for bears just to get out here. 43, breakout above the 33 high, testing the 26 close, buy the close bulls they bought, scaled in lower over here, getting out, break even. And 44, 45, 45 is another lower high major trend reversal. You can call it a wedge, 1, 2, 3, or 1, 2, 3. Double top test of the 27 high. Low probability short below 45, but it's a credible short. The risk reward is really good. You know, if you sell below 45, stop above 45, and you set your target even at the 38 low, that's more than twice your risk. That might be even more than 3 times your risk. And the reality is, if it sells off to the 38 low, you may get a measured move down of this range here. Obviously, we got much more than that, but that is initially what bears would think. Really good bar on 46. And if you're listening to the room at this point, I talked about one of the important things during 46, how it's really important to pay attention to the entry bar to see if traders are scalping out. If traders sell below 45 during 46 and they don't take profits, in other words, the market does not bounce at, let's say, 4 points, 5 points, if it starts to just go down and then maybe pull back a tick or two but keep going down, pull back a tick or two, keep going down, that is a sign that traders are continuously selling into the close of the bar. And that is a sign that the market's going to go lower. 47, 48, testing the open of the day. Strong breakout, lots of trap traders. Still sell the close, probably going lower. Speed up a little bit. 49, 50, 51, it's a pullback. 51 is a low one short. Might need more buyers below in a small second leg. But then 52 closed on its low. And the odds favor the second leg after this, so traders will sell below it. Probably use a wide stop at a minimum, betting that will go below 49. 50, part of the reason why this bounced is traders sold this close. They didn't scalp out. Those traders were disappointed. They used 50 to get out, break even really quick. Sell, disappointed, get out, break even, and look to re-enter. You know, one of the things a lot of traders do is the more they can read price action, the faster they are to get in and get out of trades because they're just confident they can re-enter. So traders sell. 52, bad. It's a bad entry bar, but it's still a bear bar. Testing the 51 close. Some bulls bought this close, disappointed 52, getting out, break even. 54, a give up bar. Enough of a surprise, probably at least a second leg down. It's also a 4-bar micro channel. Probably buyers not far below, but we may have to get down to the 3 low 60-minute moving average. Probably won't get to the open of the week at this point, but you have to be open to it. The bears want some kind of measure move down, maybe these 3 bars. Doji 55, it's an inside bar, probably buyers below, but now you have a 5-bar micro channel, so there might be sellers above, but there's also probably buyers below. 58, it's a wedge. 53, 54, 58, 56, 3, 4, and 56. Probably buyers somewhere down here, but tight bear channel, so open gap here, negative gap right here, open gap here, measure move target from here to here, so you're already there, but dangerous to buy in a tight bear channel. Big bull bar on 57. Credible. You can take it for a swing, but it's a micro channel, so probably not much lower. But we could easily fall below it, go sideways, and reverse back up. So, you know, it's not a great buy. This might be more due to bulls who bought the 55 low, scaled and lower, getting out, break even here. 58, wedge bottom, breakout, pullback short. Some bulls buy above 57, get out below 58 for a small loss. Some bears get out below 50, get out above 57. It's reasonable to exit above 57 if you're a bear and look to re-enter. Those always in bears, in theory, have to sell below 58 or below 56. So why did the bulls get out here? Why did bears get out there? Because of risk reward. Odds are at this point the market's going to rally for a few bars before it gets down to here. Now, obviously, that didn't happen in this case, but that was the higher probability. And I'll talk about that why in just a second. 58 low and short, 59 give up bar, breakout below a wedge, probably will go, some kind of measured move down, maybe. There will be some traders who buy above this bar and buy more lower above a bull bar. So maybe they buy and then they double the position here. Other traders, maybe they buy here, they buy more below this bar and they double their position here. 59 to 60, consecutive big bear bars. It is sell to close, but it's the third leg down, so this could reverse up pretty quickly. The other problem is the range is too big. This range is so big that we're probably not going to have a sustainable bear trend day on the daily chart. So even if we sell off all the way down here, we're probably going to rally back into this range. So that lowers the probability of selling down here, increases the odds that traders will buy and scale in lower. 61, testing the open of the week. Bulls buy above here, they buy more above here. Some will be so disappointed that they may get out break even. Others may wait and see how the rally reacts and see, will a lot of traders get out break even in here or will they hold? Obviously, a good bit of traders bought above 61 during 62, probably going up to the 57 high. The traders that bears get out above 61 after consecutive sell climaxes. So 62, always in long, probably buy the close and going higher. What's higher? Well, probably the 57 high, the 58 high, and probably the open of the day. It's important to remember this is a trading range. And when this was the magnet, and a sell vacuum tested the open of the week. As soon as the open of the week turned off, the market raced up. 54, buy the close, probably buyers below in the second leg. 56, you can call it a low one short at the target open of the week, and probably buyers below. But the pullback could be deep. You sell below 56, I would not. 57, outside up, probably a trading range and not going much higher. We're testing the 51 low over here, so bulls buy this low, scale in lower, get out break even. And again, I can't stress this enough, but it's really important to understand that most of the time, scale in traders can avoid a loss. And they need to realize that because that's how a lot of institutional traders trade. Here we go. 58 inside bar. Still probably buyers below. I think we're going sideways into the close. 68. And 69, high one buy, but probably not much higher. 70, 71, and then 72, breaking out to the upside. At this point, you have to wonder if we're going to get back to these lows. In a trading range, it's really common for the market to reverse all the way back to where the initial traders got trapped. I didn't think we would get there today. I thought we would get there, maybe tomorrow or in the overnight session. But at this point, I just can't buy this. It's too climactic, and for me, I would miss it. And this is very much the same thing as down here. So 72, 73, the buy climax, testing resistance, the 34 and 38 breakout points over here. So bulls get out below 74, aggressive bears sell. And why did they get out? Because there's too much risk we could sell off all the way back down here. It's the same reason why bears get out above 61. There's too much risk the market could reverse all the way here. And we reversed all the way back to the open of the day and closed right at the open of the day. Realize this had open of daily instead of open of day. So, really fascinating day, but this is one of those entertainment kind of days. Swing trading is not this easy, and I say that and it's low probability this kind of day because most of the time, scale-in traders don't get trapped this frequently. Just look how many times today. Buy this close. The buy the close scale-in traders, they buy this close, they get trapped. They didn't get a chance to get out break even for several bars. Buy this close, get trapped, never got a chance to get out break even. sell this close, well, they kind of got a chance to get out break even, but sell this close, never got a chance to get out break even. So for always in, which I think is the single best way for people to learn how to trade, always in short below 1, well, 1 or 2, but not ideal place to sell, better to wait. Always in long above 3 or 4, and then maybe 8, and then at bar 10, it's clearly always in long 10, 11, 12. No reason to get out below 17, but if you do, you have to buy again above 20, and traders get out below 26. I wouldn't buy there, or they get out below 33. Bulls buy again above 35 or 38, but if they do, maybe they get out below 40, but if they do, they buy again above 42, and then they get out below 45. It's always in short below 45, 46, and they get out above 49. They sell again below 52. If they get out below 57, they have to sell again below 58 or below 57. Bears get out above 61. Aggressive bulls buy, where they buy 62. And there's really no reason to get out until below 64, 74. For limit orders, sellers above 2. And I would not buy below 6, even though I thought there were buyers below. Buyers below 11, probably buyers below 16, but fairly difficult trade. Third push up. So you have to be quick to make a decision to take that trade. And sellers above 30, buyers below 38. Sellers in here, but the pullback could be pretty deep. And then really it. Maybe if you're real aggressive, sellers above 75, but that's pretty tough to trade. Buy the close, sell the close, buy the close 10 and 11 all the way in here, buy the close 20, 21 all the way up. I would not buy close up here. In fact, I think this is sell the close if you're doing anything. Selling, wide stop, but that's aggressive. Sell the close in here. These are all sell the close bars. Even this is sell the close. And sell the close here if you're really quick to make decisions. But most traders, I would just leave this alone. Buy the close in here, buy the close in here. I would do nothing in here, but if you had to do anything, it's tough because if you're selling, selling this close or fading this breakout, 25 and 26, is different than fading 72, 73. 25, 26, you have plenty of time. 72, 73, you do not have plenty of time. You can easily run out of time. So not really ideal. So I'm going to start answering questions. If you have any, feel free to ask them in the Discord or the webinar. Thank you. You're welcome. Have Allie or Al had a chance to post a recording lecture from the Orlando workshop? If so, do you know where? Yeah, I believe Richard sent an email out over the weekend saying that Al is expecting to have his recordings done. I think they're doing a couple of, I think they're just touching it up, Richard and Al are. They should have it released this week, I believe. And I believe Richard said he would send an email to the members that went via, you should get an email from Richard this week. For Allie, I believe it'll take him a little bit longer to get his done, but I believe Richard said in the next week or so, but they are both planning to release them fairly soon. And it looks like that is it for questions. So I hope y'all enjoyed this. As far as, I believe Rose is in the room tomorrow, but somebody is. And overall, with what I would kind of expect over the next few days, as I said, is I think tomorrow will be a bear day. But there's probably buyers down here. So, if the bears are really lucky, maybe tomorrow is a bear inside bar closing when it's low. And then at the end of the week, we sell off. But this is a lot of damage done to the bears. So just like the bulls were disappointed up here, I think the bears will be disappointed down here. So I hope y'all enjoyed this webinar, and I will talk to everybody soon.